Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in Paris with Tom McKenzie. Now, here are your top stories. No 275. The Fed hikes 50 basis points, the biggest increase in over 20 years. But Jay Powell says a jumbo move is not on the cards. The Bank of England is up next. It's expected to raise rates to the highest in 13 years. Plus, top interviews coming up this hour. We'll be speaking to the chief executives of Campari, of Binance, as well as Marko Kolanovic, JP Morgan's co-head of global research. Tom, this is why I'm in Paris at the JP Morgan conference. But to the markets, how are they looking, the futures?
Well, the handoff, of course, from Wall Street, where we saw the biggest gains on a Fed day for about a decade, Francine. Very strong session in the US, as many investors had interpreted the move by Fed Chair Jay Powell and the FOMC as being a dovish hike. Let's check in then on how the markets are opening in the first few seconds of the trade this Thursday morning. You're seeing gains of currently 0.4%, 5/10 now on the Ftse 100. The markets keep moving higher. The futures have pointed to gains of above 2% for the European session. We're seeing how that plays out just in the first few seconds. Again, that comment from Jay Powell that 75 basis points as a hike is not being actively considered at this point. He made the point and stressed this, that the FOMC were laser focused in the Fed on the question of inflation, clearly scrutinizing the data when it comes to price hikes that we're seeing across the US, but also reiterating what he sees is the strength of the US economy, and a number of times during that press conference just underscoring his views about the tightness of the US labor market. And he still believes that the FOMC and the Fed can engineer a soft landing when it comes to the US economy. It was that key line around 75 basis points, as well as, of course, the details around the balance sheet runoff, which will start in June. Let's check back in on the markets then. 160 now is the gain, 1.6% on the Ftse 100, almost 2% gains on the Italian Ftse MIB. We've got credit, UniCredit earnings to factor in as well. The earnings season continues, of course, and the Spanish IBEX gaining 1.5%. Let's switch it on and see how things are playing out across the different assets. We're looking ahead to the Bank of England as well. Central bank action thick and fast. We heard from the ECB's Panetta saying that the Eurozone is essentially in stagflation. The BOE today, though, and that decision, the market's expecting a hike of 25 basis points. We'll unpack that shortly with Lizzie Burden. In terms of the future stateside, then you're seeing losses of 0.3%, just taking some of those gains off the table that we saw posted and marked yesterday. In terms of sterling, we've seen some weakness here, down 0.8%. Again, we'll see how the BOE decision and any comments in terms of updated inflation and growth forecasts play into that. Currently at 125 for sterling, 194 on gilts. Not a lot of action, just a 1 basis point move in terms of the yields, 2 basis points. And when it comes to oil, we got OPEC plus. Of course, we saw that big run up yesterday on the back of that EU decision to restrict and start that embargo of Russian oil over a 6-month period. At $110 a barrel on Brent, you're seeing gains of 0.6%. Francine, you are in Paris. You had that fantastic conversation with Jamie Dimon and JP Morgan yesterday, and you're going to be getting more market insight for us today.
Yeah, first of all, I'm always excited to be in Paris. We also have the Binance chief executive coming up, and he got, of course, the authority of the markets here in France to give him a bit of a rubber stamp when it comes to regulating some of his business here. But the bigger conversation is, of course, what the JP Morgan investors, I mean, they have about 300 CEOs gathered here. What do they make of the Fed, and what does it mean for bond buying? And I was just speaking to one of the guests coming up, and he was saying, you know, there's an odd thing. If you look at the survey, people are quite bearish about the future, but because of their investment portfolio strategies that they need to be sure they hit, then they're still then much more bullish when it comes to the markets, although privately they're bearish. So that's a little bit of an interesting nugget there.
Yeah, I'm really interested as well in your conversation you've been having with Klanovic, who of course has said that he thinks that maybe there's a bit of over-concern within the markets, and arguably that decision and the comments from Jay Powell yesterday play in to his thesis for the markets. And I know that's going to be an important conversation to be having later in the show, Francine.
Yeah, although Jamie Dimon yesterday told me, look, there's still a 30% chance only of a soft landing. Now, the Federal Reserve Chair, Jay Powell, assured Americans that policymakers will do what it takes to curb surging inflation. Powell also said similar moves were on the table for June and July. Investors took heart that he also pushed back against a larger 75 basis point increase, with stocks notching their largest rally on the day of a Fed meeting in a decade.
The biggest issue here is he's focused on inflation, and he's going to be more Volcker-esque in terms of inflation.
It's not a hawkish Fed. I mean, they put themselves in a position where they had to do this. This is kind of a problem of their own making.
Really important point that they were trying to emphasize, that they are trying to say that there is no, I mean, he said it explicitly in the answer to the question, there's no conflict here between the labor market and inflation.
Going back to the 1930s, we have never been able to reduce inflation by more than 2.5 percentage points without inducing a recession.
It's a magical rate. Yeah. It's in the enchanted forest, the neutral rate. But yeah, I actually expected 75 to be on the table. He took it off the table.
I don't think he should have taken 75% off, 75 basis points off the table, as many people.
Let's get into the key market drivers with our markets editor, Christine Aquino. Christine, the Fed reaction, the market's verdict is that it was dovish because they took 75 basis points off the table.
Yes, Francine, and I'm not sure that that is the correct take moving forward, because in what world is a 50 basis point rate hike, the biggest in 2 decades from the Fed, really could be considered dovish? And so I think over the next few days, markets are going to have to rethink that initial reaction and recalibrate what this means moving forward for the Fed. And of course, in terms of the Fed itself, I think the communication moving forward is going to be really, really key. I think there were a lot of detractors saying that they shouldn't have taken 75 basis points off the table, and that's getting a lot of attention. But I think moving forward, you know, there's always flexibility from the Fed when it comes to kind of restarting that conversation. And of course, let's not forget, there's also the quantitative tightening aspect of this, the balance sheet runoff, which is going to be also a major component of Fed tightening policy moving forward.
Let's get a little bit on what's happening with the BOE. We're seeing sterling under pressure, currently 125, down 0.8%. What should we read into what is happening, the pressure on sterling as we lead up to that BOE decision, Christine?
Well, Tom, I think it's very interesting. I think pound really is caught between the post-Fed reaction and pre-BOE meeting. And, you know, it's very interesting. There is quite the divergence between the U.S. and the U.K. economy, whereas the U.S. economy, I think there is quite a bit of strength when it comes to, for instance, the labor market. In the U.K., we are very cognizant of the fact that we are potentially hiking into a bit of an economic slowdown. Certainly, we're facing the worst cost of living crisis at the moment in the U.K., and a rate hike, even a 25 basis point rate hike, I think could potentially hurt sentiment moving forward. I think the BOE is going to be really careful delivering that messaging today. The divergence between the U.S. and the U.K.
Christine, talk to us about some of the bank earnings. So I'm here in Paris. We heard from Crédit Agricole. We also heard from Société Générale. We heard from Unicredit of Italy. And of course, what we take away is that the dominant risk for a lot of these banks in Europe is basically Russia and what their exposure is there.
Absolutely, Francine. I mean, we've heard from the banks again, and this really just shows that Russia is really not a one-direction sort of factor, right? I mean, we've heard time and again banks really benefiting from that trading volatility in the first quarter and making a lot of money from that. But then, on the other hand, the process of exiting their businesses from the country really hurt their earnings. But then it also kind of you have to balance it out with the other catalyst that is very, very big for banks, and this is, of course, this process of policy rate hikes that we're seeing across the globe. And, you know, I think it really does make for very interesting divergence in this particular earnings season, and really shows you which particular companies are best placed to take advantage of some of these kind of competing factors that we're seeing in markets at the moment.
The ECB as well, of course, another central bank that's in the background. We've increasingly heard officials turning hawkish on this. We heard, in fact, the Italian governor, Bank of Italy governor, Panetta, coming out saying, look, Eurozone is essentially in stagnation, but also saying that the special accommodative measures that are being put in place probably should start to be unwound. What should we make of this commentary?
It's going to be really interesting, Tom. I think, the ECB is probably in the same boat as the other central banks in terms of being caught between a rock and a hard place. And those two things are growth and inflation. They really are trying to get ahead of that, or in some cases, arguably get in front of it finally after being behind the curve. But then we're seeing signs of growth slowing down as well. And so it's difficult for central bankers to navigate this. And for the ECB in particular, they've been very slow and deliberate in unwinding some of those accommodative measures that we've seen over the past decade. Potentially, they might have to speed that up a little bit, but it could be at the cost of growth for sure.
Okay, Bloomberg's markets editor Christina Kino on the central bank action, those earnings as well, coming through some of the European banks. We'll get more details on those in the next few minutes. Coming up later in the show, we'll continue getting into the market dynamics with Marko Kolanovic, as we mentioned. That's later in the show, JP Morgan's global head of macro strategy. Let's get back to the Bank of England then and all things UK. The BOE expected to raise interest rates, as Christine was saying, to their highest level in 13 years today. The central bank will also clarify how it plans to sell off some of its $1.1 trillion in government bond holdings. Joining us for more on this story is our economics reporter, Lizzie Burden, reporting from outside the BOE. Lizzie, after the Fed hiked rates by 50 basis points yesterday then, what are we expecting from the UK central bank? Does anything from the Fed change the decision-making within the BOE today?
Well, Tom, 50 basis points is still hawkish in the UK context. There may be one or two members of the Monetary Policy Committee who want to go that far today, but markets think there's only a 15% chance they'll be in the majority. So we are expecting the fourth back-to-back increase from the BOE today, but on the size of it, Bloomberg Economics reckons we'll get a vote split, and that reflects the difficult economic landscape in the UK, arguably the hardest of all major economies. On the one hand, you've got inflation at a new 30-year high. We're expecting officials to raise their forecast for peak inflation today. But on the other hand, officials aren't going to want to add to the weight of the war in Ukraine on demand. We've already had a raft of gloomy data since the bank's last decision, the PMIs, consumer confidence, retail sales. So we're expecting to land in the middle at 25 basis points, which, as you say, would be the highest in 13 years, 1%. And that would trigger the bank to consider active sales as it's promised. So we may get a consultation on how that will proceed.
Lizzie, thanks so much. Lizzie Burden, our economics reporter, reporting from just outside of the Bank of England. Now, coming up in this hour, we have conversations with the Campari chief executive, Bob Kunze-Koncevitz, the Binance chief executive, Ftse, and Marko Kolanovic, JP Morgan co-head of global research. It's an hour you definitely don't want to miss. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open this Thursday morning. We are 14 minutes into the European trading day. Some solid gains being posted on the back of that handoff from Wall Street. The biggest gains that we saw on a Fed day for about a decade. Here in Europe, then, the benchmark up 1.6%. Particularly pronounced the gains in France, Germany and Italy, all above 2% for those indexes. Every single sector here in Europe is in the green, led by autos, tech, industrial goods. The banking sector is getting 1.6%. We want to stay on the banking sector. A few European banks have reported earnings this morning following a quarter marred by the Russian invasion of Ukraine. That's had ripple effects as the subsequent packages of sanctions have targeted everything from finance to energy and forced everyone and anyone to reevaluate their Russia exposure. We're joined now by our European finance reporter, Nick Comfort. Nick, we've had results then from SocGen, Crédit Agricole, and importantly as well, UniCredit. How have the banks performed this quarter then?
Well, let's start with the good news. Revenues are holding up really well, both on the trading front, so from equities and from bond trading. That's because of high levels of volatility in markets. Investors are wanting to hedge their portfolios, sell, buy, and also on foreign exchange. It's also obviously the wild swings we've seen in currencies have been good for banks. More business volumes to benefit from. Interest rates rising, also good news for I mean, SocGen today, for example, is one bank who's seen their net interest income buoyed by that. Others will be hoping for similar down the line. It gets a little messier once you go further down from the bottom, from the top line. First of all, provisions. So yes, banks are setting aside more money for doubtful loans. It's a bit complicated. So some banks are saying just the direct exposure to Russia, Ukraine, they're taking additional provisions for that. Other banks are saying, well, if you think about the ripple effects also for supply chains, for higher commodity prices, this could put a whole range of companies into trouble and taking high provisions as such.
So Nick, so for those banks with actually a quite large or hefty Russia exposure, is it just money that they lose and never see again because of the way things are going, or is it, a provision that then could be lower than expected?
So for the loan loss provisions themselves, I mean it depends on their client mix whether they will actually lose that money or not, or whether the loans will be worth something. Generally speaking, I mean you don't lose all the money on a loan. There is some collateral, there is some money you can get back. But the provisions may be depend on the individual banks. What we do know is also the big hit from the Russia business is from winding down your business there, either by selling it, like SocGen is doing. They have a 3 billion euro hit coming in the course of this year, probably from exiting Russia, from selling it at a knockdown price to a Russian investor. Then the question is also, what does UniCredit do? Can UniCredit follow that playbook and find someone to buy their Russian business? Do they wind it down slowly? Do they leave with a bang? I'm really glad not to be in the CEO of UniCredit's shoes. It's a very tough decision how to wind down a bank which has billions of euros of loans, 4,000 staff in Russia. How do you leave from one day to the next? It's really not easy unless your SocGen have lucked out and found a buyer.
Yeah, UniCredit did it, taking, a $2 billion hit on their Russia exposure. Currently shares up about 5.7% for that Italian lender. Nick Comfort, our European finance reporter, thank you for getting us up to speed on the latest European bank earnings. Coming up, we will discuss inflation, the impact of the war, and revenge spending with the CEO of Campari, Robert Kunz-Konchowitz. Stay with us, this is Bloomberg.
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back to the Open. We are 20 minutes into your European trading day. Gains of 1.6% across the benchmark, particularly pronounced these gains above 2% over on the CAC and the DAX. The Ftse MIB as well, just close to 2% gains there. Every single sector still in the green, 21 minutes into your trading day, led by technology, which is gaining almost 3%. Francine.
Yeah, so Aperol spritzes are here to stay. I could have told you that for free, but this is really what we've seen in the results. I was just looking at the Campari numbers beating estimates in the first quarter results. It seems, Tom, that post-COVID revenge spending or revenge drinking, do it with moderation, especially for the young people, are counterbalancing any drags from inflation or supply chain disruption for the Italian beverage maker. Well, with us now to talk about those results is Robert Kunze-Koncewitz. He's the chief executive of Campari. Bob, always great to speak to you. We're joking around that actually now I'm a Campari spritz, which you were telling me that is the big thing that people are drinking at the moment. Given the higher inflation, given the problems with supply chains, and of course some of the raw materials, do you and can you continue to pass on some of these higher costs to your consumers? And good morning.
Good morning, Francine. Well, as you know, we've had a very strong start to the year, and that's really reflecting the strength of our brands. Our brands are very healthy, have great momentum, and you know, we're really fitting into this revenge conviviality theme, which we're seeing particularly at the beginning of this year in Europe. And clearly, we're having to respond to the inflation in input costs by increasing our prices. And we've taken price increases at the end of Q1, and some more will come at the beginning of Q2. And thanks to those, we're able to guide for a flat EBIT going forward.
Robert, just to be clear then, because one example, Campari prices, you talk about the pricing, raised about 10% for the last quarter. You're raising them again in the second quarter. Do you get the sense that consumers can stomach this? For how long can you continue raising prices?
No, I mean, first of all, to clarify, we take pricing in different moments in different markets. So in some markets went at the end of Q1, and others are coming at the beginning of Q2. So so far we're raising prices only once. But what's important is that, you know, we are catering to, I think, a primary need of people, conviviality, and more affordable luxury. So particularly on brands like our aperitifs, which are skewed on the on-premise, we feel very comfortable about taking pricing.
So, Bob, what are you most worried about going forward? I know there's been pent-up demand. There's a lot of parties going on. People want to go back to living a normal life after COVID. But we also have a war. We have this inflationary pressure. It's difficult for the cost of living. So how volatile is that trend going to be?
Well, the inflationary pressure is certainly there. I mean, we've seen it in the past, but we do believe that in the spirits industry we'll be able to compensate for that. I mean, much more of concern right now is production capacity. We have really heightened demand for our brands, and we're investing for the future. We've announced during our full year results a significant increase in our capex in Europe, particularly Italy, then in the US as well, in Mexico. So we have to go through that. And the other concern is obviously constraints on transocean shipments, which are still making life pretty difficult.
Are you seeing a change in consumer behavior and consumer trends as a result of these higher prices?
So far, we're not seeing any changes, no. The consumer trends are much more influenced by the pandemic. What we've seen is the strong growth we've had at in-home consumption, which happened during the lockdowns, has sort of flattened out, but you know, sales have flattened out at a high level. we're significantly double-digit ahead of the pre-pandemic era. And on the contrary, people are being very active socially, going out, and we're seeing a big growth in the on-premise.
I've been going out for 2 weeks, Bob. I'm absolutely exhausted. When you look at the shipping costs, which you were mentioning, does it change the way that you want your supply chains to work? So are you buying anything that's more local so that you don't have to pay for these freight charges?
Well, it is a little bit difficult in the spirits industry because Scotch whiskey has to be produced in Scotland, bourbon in Kentucky, our aperitifs in Italy, so inadvertently, we have to ship products around the globe.
Okay, the CEO of Campari there.
Bob, really quickly, you gave me the tip of the day. Tom, I know you want to do business, but actually Bob also gave me a good tip. An espresso, is that right? An espresso in an Aperol spritz is the way forward?
A little bit of a cold espresso. Or actually anchoreas, which is a Mexican pepper-based, jalapeno-based liquor.
There you go. Tom.
All right, there's the tip. I'm sticking with the Negronis, but thank you. Bob Kunze-Concewitz, CEO of Campari. Coming up, we're going to speak with the head of the world's largest crypto exchange. Don't miss this conversation. Binance CEO Zhao Changpeng will be with us next. This is Bloomberg.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into the European trading day. I'm Tom Mackenzie in London with Francine Lacqua in Paris. And here are your top stories. At no to 75, the Fed hikes 50 basis points, the biggest increase in over 20 years. But Jay Powell says a jumbo move is not on the cards. We'll speak to JP Morgan's Marko Kolanovic shortly. Risk assets rejoice. European stocks surge at the Open. The Bank of England decides later today. Plus, Binance, the world's largest crypto exchange, secures regulatory approval from the French government. We will speak with the CEO in just a few minutes' time. Francine, I'm looking forward to that conversation. I know you are as well. You're in Paris. You're enjoying the sights. You're enjoying the atmosphere. What are you looking at?
I don't know if I'm enjoying the sights, Tom. I'm at a conference, but they have good coffee, so that's enough with me. We're looking, of course, at what the Fed does. We're looking at a lot of the investors here at this JP Morgan conference. In Paris yesterday, we caught up with Jamie Dimon. Extremely interesting to see, first of all, how you trade this higher inflation, what you do with some of these raw material costs. If you're a chief executive, do you pass it on, but actually risk some of the consumers? And then, of course, the big focus is on some of the volatility that we could see in the markets. The killer question is actually, is crypto now the hedge against inflation? So I'm excited to have the Binance chief executive shortly.
Yeah, absolutely. It's been interesting to see something of a disconnect, some would argue, between the crypto space and the equity space in terms of risk on and risk off. But we'll unpack that story in terms of that demand as well that you're seeing, and indeed whether or not this does provide a hedge in a very volatile environment. Talking of volatility, we'll get back into the markets then, because the gains that we saw yesterday on Wall Street were pronounced risk on, particularly after Jerome Powell, and this was really the mover, came out and said, look, 75 basis points is not being actively considered at this stage. He also re-emphasized that the focus and the scrutiny remains on inflation. He said the labor market remains very tight, and essentially he thinks the US economy can stomach further rate rises, and certainly 50 basis points on future meetings is now certainly on the cards. 75 basis points, he says, not being actively considered at this point. So the read across from Wall Street, you're seeing gains across the benchmark here in Europe of 1.5%, nearly every single sector in the green. The DAX is gaining above 2%. Look at that. Earnings as well, a feature. We're looking ahead to the Bank of England later today, and of course they are expected to hike by 25 basis points, and we're hoping for more clarity on what they plan to do with the BOE's balance sheet. The Ftse 100 gaining 1.4%. Let's switch on and see how things are breaking up sector by sector then. We had the bank earnings, and we've broken that down for you, the likes of SocGen and UniCredit. Many of those banks have some kind of Russia exposure, and they're having to write that down. But overall, you're looking at volatility within the trading, producing higher revenues across the banking space. Currently, technology is top of the list in terms of your sectors, partly as a result of yields coming off. Tech gaining more than 3%. Autos and parts also up more than 2.5%. And basic resources, 2.4%. Don't forget, the oil story is also part of the mix, with OPEC Plus meeting today after that solid run-up that we saw, about 3% in terms of Brent and WTI yesterday, on the back of that move by the EU to start curbing Russian oil. Francine.
Now, one of the interviews of the day, if not the interview of the week, Binance, the world's largest cryptocurrency exchange by trading volumes, has secured regulatory approval from the French government. Now, that should prove a boost for its operational plans across the European continent. It's the exchange's first major approval from a G7 country. Well, joining us now is Ftse. He is the chief executive of Binance. Ftse, as always, thank you so much for coming on to give us an insight into what your world and your ambitions are. So first of all, congratulations, approval from the French authority market. What comes next? What does it mean in terms of timetable for what other European countries would do and what you want to attack next?
Sure. Thanks for having me, Francine and Tom. And so I think this is, as you said, this is one of the first G7 countries that's given Binance a regulatory license. And I think this opens doors for us to get more license either in Europe, in the region, and also elsewhere in the world. I think we want to continue to work closely with the regulator to establish more frameworks for this industry and keeping this industry safe. And it's also a very strong signal to the other countries. Now, look, all the G7 countries mostly have some kind of regulatory plan for this industry, and the biggest industry players like us are complying to that. So I think it sends a very strong signal that crypto is here to stay, and we want to do business in a healthy way.
So, Ftse, what do you see in France? Can France actually become a crypto hub? I mean, this is, the country. I'm in France today. I'm in Paris. It's beautiful. But it had a reputation of where people work 35 hours, not the most innovation. Is France changing? And what does it mean for your ambitions in France? What purpose does it serve?
I absolutely think Paris, France can and probably already is a crypto hub, and we can make that easier. We can increase the activity levels there. I think the previous and the current administration in France under President Macron has been very pro-business. They are strict on regulations. France is one of the toughest regulators that we have interacted with, but they are very pro-business. I think under President Macron's leadership, you can feel this mentality of they want to embrace businesses, they want to embrace new technology, and they want to attract the crypto industry. And the crypto industry is quite mobile. So the crypto industry most of the crypto industry work remotely, and the blockchain has no borders. So and France has the engineering talent, very strong on mathematics, very good schools. So things can change. France can definitely be a strong crypto hub.
And Ftse, talk to me a little bit about, you've had some regulatory approvals and some pretty big wins for Binance in Bahrain, Dubai, Abu Dhabi. Apart from the MENA region and France, where do you see the most appetite for regulators to actually embrace Binance and crypto world, and where do you see the most resistance?
Sure. I think, the resistance is easier to note. I think China, we see the most resistance. China's banned crypto exchanges, crypto mining, and plus a bunch of other businesses, etc. So I think we see a lot of resistance there. In other parts of the world, different countries are adopting this industry in different ways. Even in China, they're pushing their own central bank digital currency. So they're not discounting blockchain. So in other parts of the world, you have United States, which probably have one of the best banking support. Cryptocurrency exchanges can deduct from the user's bank accounts automatically each month. Most other countries don't have that yet. The US is kind of strict on the number of products it can provide. No lending products, not so much futures yet. But it's progressing. The SEC approved a futures ETF, early April. So so different parts of the world are different. There's so many countries it's hard to go through all that list. But France is definitely up there. Dubai is definitely up there. Bahrain is up there. There's many countries we see more and more countries coming to us, wanting our help to help them establish this industry in their country, which didn't really happen like a year or two ago. So we're really seeing that shift.
Yeah, Champong, that's an interesting trend, isn't it? The countries are now coming to you, governments are now knocking on your door. We're talking a lot about central banks. It's a big day for central banks today. The Fed, of course, raising interest rates by 50 basis points yesterday. The Bank of England's later today. The tighter monetary conditions, how much of a headwind, at least short to medium term, do you expect that to provide or produce for the crypto space?
I think overall, when this heavy quantitative easing, I think by some reports that I read, like somewhere between 50 to 80% of the US dollars were in circulation were printed in the last 2 years. That's going to cause way more than 8% inflation. So given that, I think many people are realizing that cryptocurrencies, Bitcoin, BNB, and other cryptocurrencies with limited supply can be a very good asset for holding value. Or at least protecting against inflation. So we're seeing a lot of demand in that front, and there's many other benefits. But there's many other factors. But that's already a very strong incentive for people to get into crypto.
Ftse, you keep on hinting at possible M&A and maybe buying industries or companies to then transform them into crypto lovers. Can you give us a clue? What are you thinking? What are you ready to buy right now?
We're ready to invest in any business, in any decent business, any strong business that has existing users, existing models, but then they can be helped with additional monetization models, funding models using Web3, blockchain, cryptocurrencies. Includes news sites, social media sites. I think Elon's going to bring Twitter into the Web3 world, traditional gaming companies, e-commerce, even logistics, even real estate companies. So in those other industries, we would make investments. Would just be minority shareholder, and we're pretty silent and pretty passive. But we want to help them to integrate with the Web3 crypto blockchain world.
Can I just push you on that? Have you had any conversations with Elon Musk? Are you looking potentially at investing in Twitter?
So if there was any conversations, you would be covered by the NDA, would be my understanding. So I can't really talk about specific conversations with specific people without the public announcement coming out first.
Understood. Fair enough. We've heard from the Coinbase CEO recently saying that you could be looking at 1 billion users within crypto within about a decade. Does that sound feasible to you, Changpeng?
I think that's totally feasible. So I'll give you some numbers. At the beginning of 2021, I think we had about 220 million users. At the end of 2021, we had about 100 million users. So that we've grown 5x from in 1 year, and all the users are quite active. From 100 to another 5x, 10x in a couple of years is totally imaginable. It still requires a lot of hard work. So in a decade, a lot of things could happen. People very often underestimate how much can happen in a decade.
Panama, Ftse also passed actually a crypto regulation bill. So you have Panama, El Salvador. How much, what other regulations or authorities will do things differently? Like, where do you see crypto advancement in the next 4 to 5 years?
Sure. I think on the country level, there's 8 to 20 countries looking at adopting Bitcoin and plus other cryptocurrencies as a legal tender. El Salvador has done it, the Central African Republic has done it, and now Panama's looking at it. Many of the smaller countries, they don't particularly have a currency they need to protect strongly. El Salvador never had their own, they didn't have their currency for the last 10 years. So they have less concerns about protecting their own currency. So they have less conflict in agendas. They just want to build stronger economies. There are other countries which are more wanting to attract technology innovation, like becoming hubs of large companies. And if you look at the internet, all the internet companies that we use are based in U.S., mostly like Silicon Valley. We're now in the Web3, that's the Web2 world. We're now in the Web3 world. And I think different countries want to attract this businesses so that we can provide the tools for people to use Web3 in a meaningful way. And that's really important for local economies.
All right, Ftse, I don't know how well you know Elon, probably very well, but I have an idea for a blockbuster television interview on Bloomberg, which is Ftse and Elon Musk, all about crypto. You in?
I've never met him in person, so yeah. So yeah, I don't know him that well, but I know of him.
So
He's
let's make it happen.
Yes.
We'll try and make that happen. Ftse, thank you so much. Ftse, Chief Executive Officer there of Binance. Coming up, JP Morgan Global Head of Macro Strategy, Marko Kolanovic, joins me here in Paris. We'll talk Fed, we'll talk interest rate, we'll talk inflation. That interview is next, and this is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open, everyone. I'm Francine Lacqua here in Paris. We're seeing a big rally in global stocks after yesterday's Fed decision. And just a couple of days ago, JP Morgan strategists led by Marko Kolanovic were saying that investor sentiment had got so bad that a rebound could be on the cards. So has the Fed confirmed or actually changed Kolanovic's views? I'm delighted that he's joining us here in Paris. Marko Kolanovic, JP Morgan's co-head of global research. Thank you so much for joining us. I have a million questions on the Fed, investments, and things like that. But what happened yesterday? So the Fed, hiked 50 basis points. It's the first big hike in 22 years. But actually, the markets are taking it as this is a dovish Fed.
Yeah, it's not necessarily dovish. I think market had many fears. For instance, will we have 75 basis points hike at some point? What is going to be tone on inflation? What's going to be the view on inflation? So there were a few comments that maybe alleviated those fears. And market had a bit of a relief rally. Keep in mind, before the Fed, positioning was very, very negative, very bearish. Sentiment was, so you had a little bit of a relief rally on the outcome that was not as bad as people feared.
All right, 75 basis points. You say it was the right thing to take it off the table, but then is it going to make the readjustment also for stocks a lot more difficult?
Well, there is a lot of uncertainty in the world. We had a major war in Europe. We had the coronavirus in the first quarter in the U.S. in January. Now we have in China. So there are a lot of risks. I think it's prudent to kind of take it one step at a time and basically see how the inflation progresses. And Powell did some positive comments in that direction, and that he said basically that they feel that peak of inflation might be somewhere close.
So what does it mean for you where you want to be invested in right now?
So, we like, for instance, commodities. We like some of the emerging markets like China, which are a little bit kind of removed from the whole tightening cycle. They have their own easing. So there are pockets that we like with some conviction. Overall, on the markets, we are forecasting a year that is going to be a roughly flat year, maybe slightly up, so by all standards, that's not a huge performance, but we sold off a lot, so we think from these levels, the path for market is probably higher, so if you want on a broad market level, we are positive, but we do have some more high conviction trades.
I'm surprised about China because, of course, there's a divergent play we're seeing with the support from monetary and PBOC and, of course, what we're seeing in the Fed, but they're still having this zero COVID policy. So what do you see? What do you buy in China?
So we think that, for the 2 years, Chinese market was under a lot of pressure, a lot of outflows, valuations are very cheap, and now you have this divergence, so that was our very high conviction call back in December and January when we put our outlook. The COVID is a little bit of a wrench, so we were surprised with the sort of reaction, especially what we saw in Shanghai, but we don't think that's going to be necessarily template. So we think China does emerge from COVID, and China defends the GDP target, which means more monetary easing, more fiscal easing, and even we are seeing some regulatory easing, for instance, in technology sector recently, some positive signs. So we like overall China.
What's your take on Europe? So Europe is really at the forefront of what's happening with inflation, Ukraine, Russia. Are we going to be in a recession?
There is a good probability for that. We are not forecasting it at this point, but I think that's certainly a risk and possibility.
What kind of odds? I mean, a good possibility is one.
It's very hard to model, so if I have to really guess, I would say 50-50, but there is no model with a track record that will tell you that each recession is different. Clearly, the problem in Europe now is the war that we are seeing as it spills over into commodity sector, as it spills into the sort of drag on industries and consumers. So Europe is at the sort of center of it. So we are more neutral on Europe. We prefer sort of China and even some segments in the US over Europe. But look, nothing lasts forever. European valuations have adjusted lower. So I think at the point where we start seeing some form of resolution of the geopolitical situation, Europe could rally, but that might be some, we wouldn't forecast it for the next week or even a month, but sometimes in the second half, Europe will have its moment.
Mark, is there anything in Europe right now that you would say? I mean, the ECB is messaging aggressively, also, of course, is tightening. Do you do anything with European bonds right now?
It's all relative game, US is have its own tightening path. Europe, we see, for instance, through currency, currency is obviously fairly weak, so in Europe, we like certain segments that we think there is a broader macro theme. So, for instance, energy is one. So we do expect energy prices to go higher. If you look at the European energy segment, it's even cheaper than US. So we think that could be an interesting, for instance, play.
In terms of industry, but then we're expecting energy caps as well, because otherwise you can't do with the cost of living. So again, how do you play energy actually in this region?
We like equities. I mean, we like some of the major, for instance, our sector analyst and our strategists is positive. So we generally like more cyclicals. In Europe, we again think that some adjustment already happened, so we prefer cyclicals in Europe. As I said, Europe is not our, given the situation, it might be sort of 1 or 2 months away, but we think China, for instance, and the US, we think actually might be now time for some recovery.
I mean, US tech stocks have been all over the place.
Yeah.
Are they going to continue to see that kind of volatility?
So there's a very big dispersion in the US tech stocks. You have a sort of mega cap tech, like a high quality names at the top of the index, which only saw some moderate correction so far, and multiples are pretty high, still elevated, given the projected path of interest rates. On the other side, you have what we call high beta tech, smaller cap typically, which are down 70%, 80% in some cases. So there is a big dispersion. So given all the uncertainty, we actually prefer stuff that is down a lot. So we think if there is some relief, be it on inflation, be it on yields, you can have the high beta segment of tech rally a lot. Mega cap will probably do in line with the markets.
Marco, is there a piece of the U.S. consumer that you worry about? And when it comes to inflation, is there something that shows us that maybe inflation is slowing? I don't know whether there's an aggregate or something that you look at.
There are warning signs, certainly. Price of gas, price of food, everyday expenses, mortgage rates, for instance, doubled. So there are signs of strain for sure. And that's sort of your bad news. The good news is that that labor market is very strong still, and we are reopening from coronavirus. So keep in mind, consumer didn't travel for 2 years. So yes, prices are higher, but if you didn't travel, if you didn't see your family, your relatives, how are you going to really look for that the ticket is a little bit more expensive or a lot more expensive? You will do it probably. So we think there's a tension between a hit from inflation. But on the other side, labor market is healthy, and then there is this pent-up demand post-coronavirus.
Thank you so much, Mark Klanovic. They're talking about these two opposing forces. JP Morgan's co-head of global research. Now, coming up in the next hour, we also speak to the former Finnish Prime Minister Alexander Stubb on the possibility of Finland joining NATO. Don't miss that interview live from Paris, 9:30 a.m. UK time. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 56 minutes into the European trading day. Gains of 1.3% across the benchmark, following on from what some have interpreted as something of a dovish hike from the Federal Reserve. It sounds like it's buzzing, though, in Paris, where Francine Lacqua is. Have you been dishing out and doling out the espressos, the Campari Spritz espressos? It sounds like people are on a high over there.
Yeah.
Yeah.
Yeah, people are on fire. I mean, it's one of the first conferences, of course, that's been happening in Paris since the pandemic. We have about 300 CEOs, a lot of croissants, a lot of espressos, and some great conversations. So we'll also speak to the head of research. We'll talk about markets. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Inflation is much too high. We need to really see that if higher rates are required, then we won't hesitate to deliver them.
Even if we don't get close to the 2% target, it's very likely that we will have some kind of an economic slowdown well before we get to the desired inflation target.
With regard to the additional sanctions, we're always open to additional sanctions, and I've been in consultation.
I hate to guess the future. No one really knows the future. I've never seen anyone really guess it well. But if Ukraine gets worse, I would assume that Europe's going to go into recession.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris at the JP Morgan conference, and here's what's coming up on today's program. No 275. The Fed hikes 50 basis points, the biggest increase in over 20 years. But Jay Powell says a jumbo move is not on the cards. The Bank of England is up next. It's expected to raise rates to the highest in 13 years. And coming up this hour, we'll be speaking to JP Morgan's Mark Badrichani, Barclays' Christian Keller, and the former Prime Minister of Finland, Alexander Stubb. Now, first thing is first, so let's check in on the markets. It's all about the Fed, inflation, what that means to bonds, and the great rotation. So if we get the board up, we look at stocks in Europe overall, but also tech stocks specifically, and what's going on with some of the energy, of course, conundrum as well. Stocks climbing. Again, we have this investor relief after the Fed raised rates as expected, but they countered fears of these super-sized hikes. If you look at what it means for European stocks, they're about 1.3% higher. I'm looking at futures on the S&P 500 and the NASDAQ slipping a little bit, but not a huge amount, and then the dollar turning higher with Treasury yields. Again, market reaction could evolve as we get through the day. In Europe, one of the things we need to watch out for, so let's look at the European map, is, for example, German factory orders. They plummeted. Now, this really highlights the toll from the war. And you can see, despite these concerns in Germany, because of inflation, the proximity and the reliance on Russian oil and gas, you can still see gains across the board. So the Federal Reserve delivered its biggest rate hike increase in more than 2 decades. The chair, Jay Powell, says 2 more are queued up for the next 2 policy meetings. It was his pushback, though, on talk of a 75 basis point hike that really moved the markets.
Inflation is much too high. We need to really see that our expectation is being fulfilled, that inflation, in fact, is under control and starting to come down. 75 basis point in an increase is not something the committee is actively considering. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. If that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. If higher rates are required, then we won't hesitate to deliver them.
Let's get into the key market drivers now with our markets editor, Christina Quito. Christina, good morning. The Fed reaction, the market verdict is that they were dovish. What's the strategy moving forward?
Well, friend, I think it's going to be an interesting communication strategy for Jay Powell moving forward, because in what world is a 50 basis point rate hike, which is the biggest in 2 decades, really dovish? It's only in these sort of market environments that we're living in at the moment. And so I think they're going to have to really re-emphasize that they are on top of inflation, or they're wanting to get on top of inflation, and they're very willing to do what it takes to curb that. And that while 75 basis points isn't currently on the table, that could, of course, change. And so I think the Fed really needs to wield its flexibility here and, again, re-emphasize that it will want to curb inflation moving forward, and enough to do it that markets will pay attention to that again.
Yeah, it's changed everything for bonds. Again, the market reaction could be short-lived. Bloomberg's markets editor, Christina Quito. Thanks so much for joining us. Now, we're also joined by Christian Keller, head of economics research at Barclays. Christian, is the Fed now in a very tricky situation? Because they've guided the market so much that everything will be priced in before they do anything. So we could never really have the kind of shock and awe type that we had 5-6 years ago.
I do think it's going to be a tricky communication policy for them going forward. I mean, yesterday, obviously, they took away the fear from the market about the 75 basis points. They confirmed they're moving in 50s. It seemed they're going to move in, 50 yesterday, another 2 50s at least. That confirmed, in a way, what markets had wanted, and therefore you saw this massive relief rally. But, I mean, don't forget, ultimately, they do need to slow the economy in order to deal with those inflation pressures. They have emphasized many times in the past, the labor market is red hot. You can't have the cake and eat it. If you want to slow inflation, you have to bring demand down. That is what monetary policy tightening is all about. And I think the market obviously staged a big rally now, but it's a question whether how long that can last, given that there is a realization that the economy needs to be slowed through monetary policy.
Yeah, do you think, Christian, the market is actually misinterpreting some of the things that we heard from the Fed because they were positioned so bearish? I mean, this is still a Fed. That means business that will go forward in readjusting things.
I'm not sure whether it's a misinterpretation. As I said, or as you said, the market was positioned very bearish. And now, there was a fear that there could be potentially the indication for bigger moves than 50 basis points. Those were taken away. And we're now sitting very much where, what markets expected. I think that is what gave this relief to the market. But going forward now, I think, it's unlikely going to be smooth. It's going to be very volatile because each data point, each time there's a new remark by the Fed, I think is going to swing markets possibly. So it's going to be, I think, a very volatile environment.
Christian, of course, the Fed also said that it will allow the holdings of Treasury and mortgage-backed securities to be trimmed from June onwards. What kind of impact does that have on the rest of the world?
Yeah, the quantitative tightening, as it's called, has been, there's a lot of debate around it. And it's obviously not only the US, it's going to start in other places too. But obviously, what the Fed does is most important. And it comes much, much quicker than it did during the last cycle, when there was almost 2 years between the first hike and the quantitative tightening. And the pace, actually, they're going to be at their 95 billion level already in September. The U.S. Treasury market has reacted relatively, calmly to it, but it does seem that we are now in a trend where dollar liquidity will be withdrawn. And I think, one consequence you're seeing at the moment is the dollar strength. It does mean that, the dollar looks to be strengthening going forward. And that is something, obviously, that is of concern for emerging markets as well.
So how much stronger, Christian, can you expect the dollar to become from here?
Well, we are already at, I think, 20, if you look at the trade-weighted index, already at 20 years high or so. But, this is an extraordinary situation. If we see the Fed moving ahead, and I think it depends a lot on how the economic situation will evolve around the world. There's a high uncertainty. But right now, the U.S. looks like the safest place and, the economy that can best deal with the current situation, not only with regard to interest rates, but also with regard to the war in Ukraine. So, it's hard to say, but, it can move further from here. We've seen that despite the trade deficit, the dollar has moved stronger, and it's difficult to call an end to it at this point.
Christian, thanks so much. Christian Keller, there, head of economics research at Barclays, joining us this morning. Now, we'll have plenty more, of course, on the markets and the Fed. Also coming up later on in the program, we speak to Alexander Stubb, who's a former Prime Minister of Finland. That's a conversation on NATO and, of course, the U.S. administration. If you have any questions, send your questions on IB plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
The ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris at the JP Morgan conference. Now, let's talk about banks, because we've had a few European banks reporting this morning, following a quarter marred, of course, by the Russian invasion of Ukraine. And that's had ripple effects as the subsequent packages of sanctions have targeted everything from finance to energy and forced everyone and anyone to reevaluate their Russia exposure. So let's get straight to it with our U.S. finance editor. He's Michael Moore. Michael, good morning. We've had results from SocGen, Crédit Agricole, UniCredit, and all of them, of course, have this exposure to Russia. What are they trying to do with it?
Sure. So we're seeing a bit of a difference here in that UniCredit is taking, the bulk of the hit tied to Russia this quarter, $2 billion between the provisions and the write-down of its Russia business. But they seem to be indicating that this is the major hit they'll face from this, even if they were to exit the country. So that's giving investors some reinsurance. And otherwise, they had pretty strong results. So you're seeing the shares higher today. Whereas SocGen has agreed to a deal to divest its Russia business. So they said, the actual impact of that won't come through its earnings until that deal is closed. So this quarter did not feature the type of hit that we saw at UniCredit. So a bit of a different story, but the same general theme of the Russia presence weighing on these banks.
So, Mike, how do things look actually going forward if the war continues for a protracted time? What's the exposure for some of these European banks?
Yeah, so I think you are seeing them boost their guidance for the loan loss provisions for the year, and that's largely tied to an assumption that the Russian economy is going to struggle under these sanctions, and there will be more defaults tied to Russian borrowers that these banks have went to. I think you saw so much in early March. You saw so much pain for the bank stocks. They dropped dramatically in anticipation of this. So as it's coming through, the moves are not nearly as dramatic. But, we are seeing European banks have collectively, announced several $billion of provisions and write-downs of these Russia businesses. So they do have a scale to them that is being a bit offset, though, because they have largely seized on the active markets, and the trading revenues were quite good. So that's provided a counterbalance.
Right. Okay. Mike, thanks so much. Michael Moore, they're our head of finance in Europe. We'll get more on that shortly. We also have a good conversation, of course, on what's going on in Paris. We're here at the JP Morgan Global Markets Conference, a conversation on the Fed, and, of course, some of the positioning that we'll see here with not only investors, but after the Fed hiking that 50 basis points. Coming up, Elon Musk, Cathie Wood criticize criticized having passive investing in a Twitter thread. We'll talk about that a little bit later on in the program. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance, an early edition. I'm Francine Lacqua here in Paris. Now we're joined by Mark Badruchani. He's JP Morgan's global head of sales and research here at the JP Morgan Global Markets Conference in Paris. And Mark, thank you so much for joining us. I have a million things to ask about because it's Fed Day, it's investor, there's inflation. I mean, it feels some days like the world is coming to an end, and then other days it feels like the market is like on a great ride higher. I guess the truth is somewhere in the middle.
Absolutely. But first, welcome to Paris, Francine. I know you know the city well. We're glad to have here. We've resumed this conference after 3 years because of COVID. We have 400 people coming from all over Europe and the US. And I would say the mood, and you and I discussed it before, is a bit circumspect, if I may. Like, people are worried.
People are happy, first of all, to meet each other, but when you look around the world, they kind of don't really know what to invest in, I guess.
So I think people are looking at the market, and if you ask about the Fed, clearly, and I heard Marco on your panel earlier on, yes, it was dovish in the short term, but at the same time, if you looked at the prepared remark, it was hawkish. I think what you saw yesterday is some depositioning. You had our macro hedge fund guys were convinced that there was a possibility of a 75 basis point hike. I think commodities, I'm sure we'll talk about it, is something which is on everybody's mind. And what you saw yesterday is probably the Fed showing that they're in control of the situation. They know what they're doing. And if anything, that will reduce the volatility in the market. And if anything, get the market go a bit higher.
Was it a mistake, though, taking out 75 basis point hike off the table? It focuses the market, certainly. I mean, you could have pockets of correction.
There are 100 ways of looking at it, and you speak to 10 people, you have 10 different explanations. I think it's a very challenging job that the Fed has and the ECB, and hats off. I think they've done a phenomenal job during the COVID crisis, and right now we're facing a new situation. We have more growth, we have more inflation, and we have to deal with it.
If you had to choose between inflation and growth, and this is what probably will come down to the central bank. I mean, how does the market look at this?
So it's funny, 2 weeks ago we had the IMF conference in DC. On the side of the IMF, we run that every spring and fall. And the US client base was very focused on inflation and wanted the Fed and the ECB to do more. The European client base and the IMF representative there were highlighting the issue of growth in Europe. And I think US and Europe are, yes, in a similar situation, but there are major differences. First, I think the US has full employment. You've seen a lot of the COVID dividends has paid off already. The US consumer is in a good place, and as Marco was saying earlier on, like it's good. Europe, Ukraine is hitting Europe more hardly. Okay, the reality of energy prices is something which is very serious in Europe, and I think you feel it in the mood here. It is something, and we did a polling this morning. It said in terms of top concerns for investors.
This is investors or chief executives?
Investors. So here we have a conference. We have, as I said, 400 investors from across Europe, mainly asset managers and hedge funds.
And the survey? Bearish or bullish?
No, so in a way, it's like I like to say there is a difference between what people think and what people do. So to give you an example, people are very bullish on commodities. And we drilled down on the question, I think 60% of the room thought that commodities was going to be the best performing asset class. But then if you drill down and you ask them which one, agriculture comes first. And I forgot the exact number, but let's say 47%. And then if you really ask them, how many of you are really investing in agriculture, where the reality is not so many. Unless you're a macro hedge fund and you can do pretty much what you want, if you're an asset manager, you have a mandate. You have to stick to your mandate. You have caps about how much you can allocate. So, yes, commodities is definitely an area where people are very focused on. I think the credit market, it's if you start looking at high yield, high grade, we're starting to see non-traditional buyers dipping into the high grade market. Why? I think we had a lot of volatility. With rates going up, yeah, go ahead.
But Mark, no, I mean, what's interesting is that this difference, right, between what people think and what people do. Is it the mandates, or is it because they don't know how to trade it? Because actually, if you look at the war, it's either really, it ends really badly or it ends okay, and so that's very difficult to play on the markets.
Yeah, no, but it's not. It's often not binary. Okay, in the sense you believe that commodities prices are going to go up. There are different ways to play. If you're a stock picker, you're going to probably go after stocks which have a commodity exposure. And this is where it's very the word is unfortunately or fortunately complicated. You would think, okay, agriculture, that should be good for farmers. Well, if you're a farmer today, it's not great. Your fuel costs have gone up. All your fertilizers costs have gone up. Your labor costs has gone up. You're getting squeezed. Yes, you may sell. Yes, shipping. Yeah. You will sell your wheat at a higher price, but you need to get to that point. So I think it's when you start drilling, A, it's hard even if you have an overall view to put that view in place, and B, to your point, you have mandate constraints. If you're an asset management, maybe your limit is to put 5% of non-aligned investments in your fund.
So, Mark, how does this end? Because the other concern, of course, is that when you look at the timeline, and reducing energy dependency, even some of the commodity, getting things online, there's a mismatch. How ugly will the next 12 months be as we try and adapt and adjust?
So it is, and I was listening to Jamie that you interviewed yesterday. I think it's very hard to predict, and we're not betting people, but we live in a world where we have different types of clients. We have corporate clients, we have hedge fund clients, we have asset managers. Our job is to make sure that we are able to service them. So if you're corporate right now, what are your concerns? Your concerns are supply chain, labor costs, return to the office, believe it or not, it's still a concern, shipping, to your point, and inflation. Now, if you're a big food producer, inflation is probably less of an issue because the price of raw materials in your price are relatively a small portion. If you're a small producer, it has a big impact. A hedge fund on the other side, all they want is to find dislocation in the market. They probably love these environments with high volatility. Some of them have great performances, others are struggling a bit more. So, yeah.
It's different for different clients. I also want to go back to the working from home idea. So hold that thought, Mark, and we'll be with you very shortly. We'll be back after the break with Mark Bajiciani, JP Morgan's Global Head of Sales and Research. In the meantime, let's also check the markets because it is the day after the Fed, so all about the markets. And of course, the rally that we've seen, stocks and bonds are actually rising overall. Again, the Fed tightening their bets on what they're expected, but because they took 75 basis point hikes off the table, they are interpreted as being dovish. Will it hold? We'll have more. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris at JP Morgan Global Markets Conference. Now, still with us, Mark Bajiciani, JP Morgan's Global Head of Sales and Research here at the conference in Paris. It's buzzing. I mean, I can hear you just about because so many people are so happy to see each other. Of course, this conference had a 2-year hiatus. Mark, thank you for sticking with us. We were talking a bit before about the challenges that some of your clients and the chief executives tell you. How do they deal with working from home? Is it really a problem for them?
So I think everybody is struggling with it for a couple of reasons. On one hand, we've seen that working from home works. And we were able, and you could see how a number of our conferences were done online, etc. And it's true, unless you're manufacturing, it's true for every officer. On the other hand, people also notice, and you see it in this room, there is something that happens when you have people together. There are the drinks, of course, but there is the fact that you exchange, you get more ideas, you are able to have a culture. I think the people who are struggling the most are probably the tech companies, because they were quite liberal in their work-from-home approach, but now they're realizing that they've lost connectivity with their employees. And for them, if you're a programmer working from home in California or wherever in the world, your loyalty to the company, your connectivity to the company is very low. So that's their challenge.
Mark, because they can do it elsewhere, they can work from home?
Because to resign or to find another job, you log out and that's it. You're working for a different company. You don't know. You don't have any connectivity with your firm.
Because, Mark, I guess the other flip side to this is companies that want people back in the office, if they don't give their employees of a certain senior level that flexibility, would go look elsewhere. And so again, this is a hugely difficult decision to make as an employer.
It's funny. Like we're in France. I was listening to a competitor channel this morning, and they were saying that just by mistake, of course. And then they were saying that 70% of the people who changed job in the past year regret it. And you wonder, okay, why do they regret it? And I think part of it is we've seen some catch up after COVID where people want to try something else and the mobility had reduced, so now they're moving. I think for companies in general, there are jobs that are perfectly suited to working from home. Other jobs, I can tell you, on the trading floor, all our sales and trading folks, we've been back in the office day one because we need to be able to provide liquidity to our clients.
But Mark, what does that mean for inflation? So I know we're looking at wage pressures. Again, yes. Do you have to pay employees more to make sure that they feel valued in their jobs? And if you're a chief executive manufacturing, how difficult is it to pass on that cost to the consumer?
So yes and no. And you will realize it's amazing. Like the number one reason for people leaving their job is not liking their boss. You could pay them a lot of money. If they don't like their boss, they're leaving anyway, okay? I guess I like my boss. I've been here working for him for 12 years. But the point is, money is not everything. There needs to be wage inflation. And I remember Jamie on one of his interviews saying, well, CEOs shouldn't be crybaby about it because it's good. It's good for the economy. It's good for employees. It's good. Yes, it is challenging for companies. But we need to get used to an environment where we will have higher inflation, we will have higher wages, and we might have higher rates. And guess what? That's not the end of the world. If anything, we could have a buzzing economy with all of that.
Mark, thank you so much for all of your insight. Mark Mabishani there, JP Morgan's Global Head of Sales and Research. Now, let's shift focus to the UK. The Bank of England expected to raise interest rates to the highest level in 13 years today. The central bank will also clarify how it plans to sell off some of its $1.1 trillion government bond holdings. Joining us now is Bloomberg's UK economy reporter Lizzie Burden, reporting outside the Bank of England. So, Lizzie, after the Fed hiked rates yesterday, what are we expecting from the BOE today?
Well, Francine, 50 basis points is still hawkish in the UK context. There may be one or two members of the Monetary Policy Committee who want to go for 50 basis points, but the market sees only a 15% chance that they'll be in the majority today. We're expecting the fourth back-to-back rate rise from the Bank of England, but Bloomberg Economics does see a vote split, and that reflects the difficult economic environment in the UK, arguably more difficult than other major economies. And that's because on the one hand, you've got inflation running at a new 30-year high. We're expecting the bank to raise its forecasts of peak inflation in the short term today. But on the other hand, officials aren't going to want to add to the weight of the war in Ukraine on demand. We've already had a raft of gloomy data since the last Bank of England decision, the PMIs, consumer confidence, retail sales. So we're expecting to land at 25 basis points, which would take the key rate to 1%, which would be the highest in 13 years. And it's the level at which the bank has said it will start to consider active sales of gilts.
Lizzie, thanks so much. Lizzie Burden there, Bloomberg's UK economy reporter outside the Bank of England. Now, Jamie Dimon says the Federal Reserve should have moved quicker to raise rates as inflation spikes. The JP Morgan chief executive told me that the central bank's actions leave only a 1 in 3 chance of a soft landing. Well, Dimon spoke to me ahead of the FOMC decision.
Very strong U.S. economy.
Yeah.
Consumers in great shape, lots of money, spending the money, jobs are plentiful, wages are going up, though everything's distorted by inflation and all that, but those are good news, and businesses are in very good shape, and the Fed is going to have to raise rates and reverse QE. And they're going to, if they can, they're going to try to slow down the economy enough so that 8% starts to come down over time. And I wish them the best.
Yeah.
We're a little late, but, remember 2 years ago we had 15% unemployment and no vaccine. So I think people should take a deep breath, give them a chance, and I think they're going to move. I think the sooner they move, the better. So, yeah, they're going to be raising rates.
Deep breath, but what could go wrong, though? I mean, you talk about, a strong U.S. consumer, strong business. You talked also about storm clouds. What are those storm clouds, and what's worst-case scenario right now?
Yeah, I hate the word unprecedented, but there's kind of fiscal and monetary-induced unbelievable growth in the U.S., which was true around the world, though it's obviously slowing down in Europe. That's abnormal. We've never really quite had that before. We've never had QT before. So, you look at QE, that's one of the greatest experiments ever done. They're going to be writing books for 50 years on it, and we're going to have to reverse it. And that's a huge change in the flow of funds over time around bonds and rates and stuff like that. My own view is that rates will still have to go up from here. And then you've got Ukraine, which, I think is a potential, when you look at Ukraine, obviously the wishful thinking is we have a Fed-induced slowdown works. The world is fine, Ukraine resolves, but there's a chance that this goes on for years and that you completely rattle global energy markets, wheat markets, commodity markets, and we need, as the Western world needs to be prepared for that and needs to take every action today to be prepared that can get really bad tomorrow. And when it gets really bad tomorrow, you don't have time.
So how do you handle that? What's your plan B if it does go all pear-shaped?
I like the fact that it will deal with it. That's life.
But how?
I like in my view, the most important thing is American growth, and that America, I call it this Marshall Plan for energy, that we do everything we can, and this doesn't violate climate change, it doesn't change anything about long-term objectives, but that we do everything we can to get oil and gas into the hands of Europeans so they don't freeze in the winter. And again, I'm not saying it's going to happen, but you have a couple of problems out there. The national energy stuff the global energy is precarious.
What's the role of Europe in this? Could Europe see a recession because of the energy prices?
Absolutely. Our economists would say that Europe has slowed down to 2% or something. But the problem with right now, and the economists would agree with me, we're looking at a static analysis that if things stay the way they are. But you and I know for certain things don't stay the way they are. And my view is there's a very high chance that oil will go higher. It only takes 1 million to 2 million barrels off the market a day that can drive prices up $30 or $40. And so we should prepare for that today.
The JP Morgan boss, Jamie Dimon, there speaking to me a bit earlier. Now, coming up, former Finnish Prime Minister Alexander Stubb on the possibility of Finland joining NATO. That interview's next, and this is Bloomberg.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Chinese travel and spending plummeted over the National Labor Day holidays. The government's stringent COVID-0 restrictions and fears of infection kept people at home. Tourist spending over the 5-day vacation period was down 43% from 2021. The number of rail trips taken over the break fell by 80%. Now, U.S. regulators have added to a broad list of Chinese companies that face delisting in the U.S. JD.com is among more than 80 firms put in the regulator's spotlight because of Beijing's refusal to allow access to financial audits. The US and China have been at odds over the disclosure policy for years, and the SEC is cracking down on firms that do not comply. A group of British oil traders who made $700 million in a few hours have failed to prevent regulators from obtaining their records. A judge in a London court ruled that Vega Capital traders must hand over documents to the UK's Financial Conduct Authority. The FCA was asked to intervene on behalf of the US Commodity Futures Trading Commission, which is actually leading that investigation. The traders say they were simply following publicly available market signals. And Booking Holdings has reported revenue in the first quarter that was better than analyst estimates, benefiting from pent-up demand for leisure travel. Shares in the biggest online travel company in the US jumped in after-hours trade, as it also reported a record quarter for gross bookings. This as travel executives say they are expecting a surge in bookings this summer as customers do splurge on vacations. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, reports in Finnish media say Finland is expected to make its decision on whether to join NATO in the coming days. Helsinki has been reassessing its security policy in light of Russia's invasion of Ukraine. Membership of the alliance, of course, would shift the security balance of the Baltic region, with neighboring Sweden also considering NATO membership. Well, joining us now from the JP Morgan Global Markets Conference here in Paris is a former Prime Minister of Finland. He's Alexander Stubb. Thank you so much, Mr. Stubb, for joining us, as always. I mean, this is a very difficult decision to do now. Join NATO, antagonize Putin, stay out of NATO, and risk security.
Well, yes and no. I think it's a continuum of Finnish foreign and security policy, which started with EU membership in '95 and forging a strong partnership with NATO. You know, we're more NATO compatible than most NATO states. And the way in which we see it is very much a win-win for Finland, for Sweden, for the Baltic Sea region, and for NATO, because, you know, you're looking basically at an army with 900,000 reserves, 280,000 mobilized, over 60 F-18s, 64 F-35s, different types of defense mechanisms. So I think it's very much a win-win. And I think our president has put it well. He says Finnish NATO membership is not away from anyone. It is for us. And I think that's a good way of putting it.
But it's the interpretation of how Russia actually takes in Vladimir Putin that's key here. How will he take it? Is there a danger that actually this escalates?
Well, the answer is no. And you have to go back all the way to 1949. And remember when Norway, Iceland and Denmark, Nordic countries, joined NATO, the reaction of the Soviet Union at the time was very similar. Now, what do we expect in Finland? we expect three types of intimidations or action. One is hybrid, one is cyber, and then one is information. The information war is already going on. I mean, you know, you saw yesterday Astrid Lindgren, the author of Pippi Longstocking, or Kamprad, the father of IKEA, being called Nazis in Russia. When Zelensky was giving a speech at the Finnish parliament 3 weeks ago, the home pages of the Finnish foreign ministry and defense ministry were down. So this kind of stuff we'll be seeing.
But this is what intimidation. I mean, I guess we hear about the nuclear possibility, and I don't know whether we should think about it, how we should think about it. Like you were in charge of a nation. How should we look at it?
Yeah, I mean, obviously you always have to prepare for the worst case scenario. But let's be frank here. Putin might be a lot of things, but he's not suicidal. So the even attempt to start playing with the nuclear option, I think it's pretty much out of the question. And to be honest, I think that Putin is right now quite engaged in the front in Ukraine. And to put it diplomatically, it's not exactly like Russia's military escapades are doing a great job. So we don't expect this to be escalated in a conventional way.
How do you expect the war in Ukraine to finish? Could this be a very protracted and difficult war, or could we have a resolution?
Well, I think we're into plus 60 days of this war now. And Finnish winter war with the Soviet Union lasted 105 days. I see this being a protracted, long conflict. There are a lot of different scenarios how it could end, but my guesstimate is that it will end in a similar type of a frozen conflict with which it already started. But it's too early to say.
China seems to be playing a key role. How should Western allies try and convince China to get on their side?
Yeah, I think China is oscillating between pivoting with Russia and pivoting with the West. With Russia, it's doing the normal thing. In other words, going in where power vacuums and necessities for investment and infrastructure are needed. With the West, it's very careful because it's really afraid of secondary sanctions. It understands that it's all about the Belt and Road Initiative, business in Europe, business in the United States. So it's not a comfortable bedfellow with Russia at all.
I mean, would they be neutral or lukewarm? And actually, can they stay in this position for much longer?
I think they will. And, you know, all of this talk that we are creating a bipolar world with a liberal world order, an authoritarian world order with Russia and China on one side, I don't think that'll be the reality. It'll be much more complex. It'll be flexible alliances between the East and the West, between democracies and non-democracies.
What does it mean for the dependency, for example, on rare earths, some of the security? It'll be complex, but in 5 years, how will the world look different?
Yeah, it depends on where Russia is at that time. I think we're looking at a Russia which will be isolated, and I think the dependency, therefore, with China and the West is going to be even closer. And yes, you could argue that some of the things that were supposed to bring us together have usually been driving us apart, but the truth is that I think the path dependency right now on raw materials and others is so close. And China understands that you cannot have an authoritarian rule without results, and therefore it cannot withdraw itself and decouple itself from the West.
Should we have seen this coming, the Russian war on Ukraine? Is there something that the West could have done?
Well, yes and no. I see this as a sequence of wars. The first one was in 2008 in Georgia, where I mediated peace as foreign minister. Stakes were low, ceasefire 5 days. The second one was Crimea. Well, you couldn't really fight anyone. The third one now is Ukraine. I think this was a tactical and strategic blunder from Putin's side. He never expected the West to be so united as we have been in terms of sanctions, armaments, etc. But I do immediately add that we in the West have to understand that this is not about Russia versus the West. It is as much about the West versus the rest. The reaction of the rest of the world has actually been lukewarm. And we have to take that into consideration.
Should Europe have an all-out oil and gas embargo?
Oh yeah, in the long run. And this is what I keep on saying.
Why the long run?
Oh, because you have to phase it out. You have to take it step by step for financial, military, strategic reasons. But I think the base case for business is the following. Think about a divided Europe. Russia on one side, 40 European countries on the other. Russia will be fully isolated, politically, economically, financially, sports, culture, transport, energy, and travel. And this will last 5 years, 10 years, 15 years, we don't know. But that is the base case that you have to think about. Therefore, first get rid of coal, now get rid of oil, and then phase out gas.
Thank you so much for joining us. Alexander Stubb there, the former Prime Minister of Finland, joining us today from the JP Morgan conference in Paris. Coming up, Binance secures regulatory approval from the French government. That's a boost for its expansion plans across Europe. So don't miss our interview with the Binance chief executive, Ftse. That's coming up next, and this is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lac right here in London. Now, Binance, the world's largest cryptocurrency exchange by trading volume, has secured regulatory approval from the French government. It's the exchange's first major approval from a G7 country, and we spoke to the Binance chief executive, Ftse, in the past hour.
Overall, when this heavy quantitative easing, I think by some reports that I read, like somewhere between 50 to 80% of the US dollars were in circulation were printed in the last 2 years. That's going to cause way more than 8% inflation. So given that, I think many people are realizing that cryptocurrencies, Bitcoin, BNB, and other cryptocurrencies with limited supply can be a very good asset for holding value, or at least protecting against inflation. So we're seeing a lot of demand in that front, and there's many other benefits. But yeah, there's many other factors, but that's already a very strong incentive for people to get into crypto.
Ftse, you keep on hinting at possible M&A, maybe buying industries or companies to then transform them into crypto lovers. Can you give us a clue? What are you thinking? What are you ready to buy right now?
We're ready to invest in any business, well, in any decent business, any strong business that has a existing users, existing models, but then they can be helped with additional monetization models, funding models using Web3 blockchain cryptocurrencies. Includes news sites, social media sites. I think Elon's going to bring Twitter into the Web3 world, traditional gaming companies, e-commerce, even logistics, even real estate companies. So in those other industries, we would make investments. We'll just be a minority shareholder, and we're pretty silent and pretty passive. But we want to help them to integrate with the Web3 crypto blockchain world.
Can I just push you on that? Have you had any conversations with Elon Musk? Are you looking potentially at investing in Twitter?
So if there was any conversations, you would be covered by the NDA, would be my understanding. So I can't really talk about specific conversations with specific people without the public announcement coming out first.
That was Ftse, the Chief Executive Officer of Binance, speaking to us a short time ago. Now, this is what the markets are telling us. Of course, it's the day after the Fed, and we saw a nice little lift, a nice little rally when it comes to equity stocks across the world, but certainly here in Europe. This is on the back of the Fed actually taking off the possibility of that 75 basis point hike off the table. Stocks climbing again. There's investor relief that the Fed raised interest rates, but to tackle high inflation, they're not going to do these supersized hikes. I'm also looking at some of the tech stocks futures actually on the S&P 500 and NASDAQ slipping a touch, the dollar turning higher with Treasury yields. Now, Bloomberg Surveillance Early Edition continues in the next hour. Kriti Gupta, Katie Lyons in New York, and Edwards will be in London. We'll have full market moves, and I'll have plenty more throughout the day right here from Paris at the JP Morgan Market Capital Conference. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Inflation is much too high. We need to really see that if higher rates are required, then we won't hesitate to deliver them.
Biggest issue here is he's focused on inflation, and he's going to be more Volcker-esque in terms of inflation.
Going back to the 1930s, we have never been able to reduce inflation by more than 2.5 percentage points without inducing a recession.
It's not a hawkish Fed. I mean, they put themselves in a position where they had to do this. This is kind of a problem of their own making.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, May 5th. Our top stories today. U.S. stock futures dropped back after a strong post-Fed rally. The Federal Reserve hiked rates to fight inflation, but stocks initially rallied after the Fed chair eased fears over bigger policy moves. The Bank of England is set to raise rates to the highest level since the financial crisis. It will also lay out how it plans to unwind more than a decade of bond purchases. And Ukraine is accusing Russia of what it calls missile terrorism in a wide range of attacks across the country. We will discuss the war in an exclusive conversation with the former U.S. Defense Secretary, Leon Panetta. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lines and Kriti Gupta over in New York. Matt Miller is off today. And Kaylee, the initial reaction to the Fed, clear to see, risk on for risk assets. But the recent movement in futures suggesting we ask questions how long that lasts for.
Yeah, exactly, because even if Jerome Powell took 75 basis points off the table for now, he also said they won't hesitate to hike more if the data tells them they need to. So that's something that the market has to consider. Now, in Asia, I would say you did see some following through of the rally here in the U.S. in the overnight session. The MSCI Asia Pacific Index as a whole was up about 0.4%. Japan was still closed for a holiday. China, though, opened back up. Didn't see a gain, though. It actually lagged behind the broader Asian markets a bit. Part of that is just ongoing concern around COVID-0, even as you have state media reporting on pledges that Beijing is making to support the economy. One other drag on the Chinese market was one stock in particular, Hangzhou Hikvision. This is a surveillance company, fell 10% overnight on news that the U.S. is considering imposing new sanctions on the company, potentially the harshest of any Chinese company so far. In other asset classes, I would note that the Japanese yen is weaker once again against the U.S. dollar. We're trading in and around 129, 129.71 is where we are at the moment. And you're seeing some follow through in the bond market to a less hawkish than feared Federal Reserve. You definitely saw that evident in the short end in Australia. That two-year yield, Kriti, coming in nearly 18 basis points back down to 271.
Yeah, Kaylee, you mentioned that risk-off tone that you might be seeing in futures this morning. Well, this is coming off the back of the biggest increase in the stock market, going all the way back to 1978 on Fed Day. So it's only natural that futures kind of take a little bit of a step back, pair some of those gains. That doesn't necessarily mean this is not going to turn around in a couple of minutes, or a couple of hours, I should say, as we get closer to the stock market open. Nevertheless, futures down about 0.7%. When you look at the rest of the cross-asset picture, though, not a ton of movement, especially in the yield space. Remember, we did see a lot of anticipation going into the Fed meeting. You are seeing just about 1 basis point a yield higher, 295 on the 10-year. Not that exciting, just given the context that we've been given. The question is, what drives it now that the FOMC decision is in the rearview mirror? Crude also about flat on the day, and Bitcoin up, down only about 0.8%. So once again, not a ton of moves outside of the future space, but the question is, does this all turn around as we see more and more investors reposition when the stock market opens, Anna?
Yeah, absolutely. And Christy, we're still telling yesterday's story, really, when it comes to the European stock markets. And that is that strong rally that we saw on Wall Street post the Fed. And so we see that moving its way across the Atlantic into the European equity markets. And post-Fed, we see a rally here for European stocks, up by more than 1% on the French market and the German market in particular. It isn't just the post-Fed move, though. There's some earnings news in here as well. Let me show you what's going on with basic resource stocks. That is part of the maybe post-Fed environment. We see this is one of the best performing sectors this morning, up by 1.9%. Technology also doing well on the back of that Fed interpretation by markets. But we also see some positivity around earnings stories, and I'll get to that in just a moment. The pound is losing ground against the US dollar, down by 0.7%. We're working our way towards another interest rate hike from the Bank of England. That's the expectation in markets, at least, that we get that in a couple of hours' time. We'll get a report from our colleague Lizzie Burden outside the Bank of England in just a moment. This is the positive earnings story I was talking about. Shell up by just over 3%. Yes, we've got higher oil prices, and that is a feature of markets, or was certainly a feature of the markets yesterday. And so the market's maybe still playing on that theme in the EU ban. But also we're seeing strong performance in the rearview mirror from Shell, a record quarterly earnings picture, and so that going some way to offset concerns for the sector around Russia. Airbus is up by 7.3% over in Paris. They're focusing on a ramp up in the pace of production of their A320s, and that has gone down very well with investors, despite war in Europe and slowing growth in China. Quick reflection on what's going on in Russian assets. We have seen a bit of movement higher in some of the energy-related and commodity-related stocks over in Russia as a result of, well, the higher commodity prices of yesterday, but also some of the divisions we're seeing within Europe about that Russian oil ban. If Hungary were to try and stand in the way of a block on Russian oil, Kaylee, then that is something that, of course, Russia will be paying attention to.
And, of course, we will look for any developments on that front. Anna, as for what else we're looking forward to in the day ahead, OPEC Plus will be meeting virtually and is likely to ratify another small production increase. The UK also will be voting in local elections where the Conservative Party may lose hundreds of seats. And finally, as Anna mentioned, we will get that Bank of England rate decision. That's coming up at 7 a.m. New York time, Creedy.
Yeah, Kaylee, let's get to the biggest news, though, from yesterday. The Federal Reserve delivered its biggest rate increase in more than 2 decades, and Chair Jerome Powell says 2 more are queued up for the next 2 policy meetings. But it was his pushback on talk of a 75 basis point hike that moved the markets.
75 basis point increase is not something the committee is actively considering. There's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings.
Well, let's get more on the Fed here. Bloomberg's Danny Berger is covering the markets from London, and Michael McKee, our international economics and policy correspondent, joins from Washington. Danny, let's start with the post-Fed market moves here. Yesterday, the biggest rally on any Fed hike going back to 1978. Talk to us and walk us through that price action.
Yeah, I really like how Steve Englander over at Standard Chartered describes it, that this is a case where doing what's expected turns out to be dovish. And the reason we had a reaction as if it was a dovish thing, I mean, it wasn't really, it was a 50 basis point hike, is because macro hedge funds had been really short this treasury market going into the decision, assuming that perhaps we would have talk of a 75 basis point hike. That didn't play out, so you get this immense short covering where a 2-year yield drops by 14 basis points. The question for markets is this the end of hawkish surprises when it comes to the central bank? And with 200 basis points priced into the front end in terms of tightening this year, is this the peak in 2-year yields? Now, this 2-year yield fall combined with the stock market rally yesterday, that great superlative you said, Critty, really showed us the extent to which the reaction was one of easier financial conditions. And that's kind of the opposite of what the Fed wants to happen if they want to combat inflation. Of course, we wouldn't be doing our journalistic duty if we didn't throw some cold water on it. Slightly, some of this is coming back today, though that's not surprising given the extremeness of the move. But we have to remember we have yet to begin the balance sheet unwind. Also, if there's concerns about growth as we tighten, that certainly won't be good for risk assets, Kaylee.
All right, Bloomberg's Danny Berger, thank you so much. Let's get over now to Michael McKee for more on the Fed's decision. So, Mike, as Danny said, you didn't see a tightening of financial conditions after this. Did the market get the message that Jerome Powell wanted it to?
Well, the market definitely got the message. We watched the bets on whether or not the Fed would do 75 at their June 15th meeting just evaporate as he talked. They've moved back down to 50 basis points, which is what Jay Powell says the Fed's going to do for the next couple of meetings. And so the market is repricing for where the Fed is, but again, to say it's dovish with a 50 basis point hike, the highest since 2000, that's an interesting way of looking at the world. The benchmark rate, Powell said, should be at about 2.5% by the end of the year. That's close to where they think neutral is, although he says they don't really know. Balance sheet reduction starts June 1st. They don't really know what that's going to do to rates either, but he thinks it may add 25 basis points over the course of a year. And here's the key line. Yes, Powell says, there may be some pain. Now, he thinks the U.S. economy is strong enough that the Fed can bring it into a soft landing, or as he said, a softish landing, but history is not on their side. You can see there every time the Fed is raising rates significantly, the U.S. economy has gone into recession, and you look at where inflation is now, and it is going to be a tough task for them to get ahead of it. And we'll see how, as the year goes on, the Fed whether they sound continually dovish or not.
Mike, let's throw things forward and think about something that the market will be quickly moving on to this week, and that is the U.S. jobs report due out tomorrow, of course. What do expectations look like post the Fed for where we go here? Of course, the tightness of the labor market will be key.
Yes, absolutely. And I think that this is going to be one of those interesting cases like the Fed where what is good looks bad, because we've had very strong job growth, and now it's expected to pull back a little bit to 380,000 for the month of April. The unemployment rate, though, would tick down to 3.5%. Participation rate ticks up. Average hourly earnings slow a little, but not too bad. So that's a strong report. But because the headline number is expected to be a little lower, it may be seen as not as good on Wall Street. It would be a suggestion that perhaps we're running out of workers.
Mike, thank you very much. Bloomberg's Mike McKee with us from Washington. Now, the spotlight in monetary policy terms moves to the Bank of England. Our UK economy reporter, Lizzie Burden, is reporting from outside the BOE, outside the central bank. And Lizzie, after the Fed hiked rates by 50 basis points yesterday, what are we now expecting from the BOE today? Of course, the BOE has been hiking for some time.
Yeah, Anna, 50 basis points is still hawkish in the UK context. There might be one or two members of the Monetary Policy Committee who want to go for 50 today, but markets expect they'll be in the minority. Bloomberg Economics does see a vote split, but that reflects the difficult times in the UK, the fine line the Bank of England has to tread. On the one hand, you've got inflation running at a new 30-year high, and only expected to rise. You could see the Bank of England increase its forecast for peak inflation today. On the other hand, officials aren't going to want to add to the weight of the war in Ukraine on demand. And you've had a raft of gloomy data since the last Bank of England decision. Consumer confidence, PMIs, retail sales. So we're expecting to land at 25 basis points, which would take the key rate to 1%. And that's the level that markets expect will prompt the Bank of England to at least consult on how to approach quantitative tightening actively.
Lizzie Burden reporting from outside the Bank of England. We thank you as always. Let's go from England to back here on the United States. Ukraine accusing Russia of using what it called missile terrorism across the country. Russia bombarded, railroad stations and other supply line targets throughout Ukraine. Russia's defense minister said that the West is, quote, stuffing Ukraine with weapons. This comes as the U.S. Congress could pass a Ukraine funding bill as soon as next week. Jack Fitzpatrick, Bloomberg government reporter, joins us now from D.C. Jack, what is the latest when it comes to the assistance, food or military, going to Ukraine right now?
Well, whether you want to say they're stuffing them full of weapons, there is a lot of support for sending more military aid as well as economic and humanitarian aid to Ukraine and beyond in this request. A lot of this is focused on Ukraine, but there's also broader money for the World Food Program because of the issues with wheat coming out of Ukraine. There's bipartisan support for this in Congress, and the latest we've heard is that, yes, this could happen as soon as next next week. Senator Chuck Schumer, the majority leader, said that that's the goal. I just checked with Chris Coons, who's a key member for foreign aid funding. He said that still seems to be possible. The big challenge is a number of Democrats want to attach and go in one big go the Ukraine aid as well as COVID aid, both domestic and international needs. The COVID fight has been locked up with Republican pushback to the decision by the Biden administration to end that Title 42 immigration policy. So there's always the possibility that Congress will do what it does in terms of slowing down progress on one bipartisan priority by attaching a number of other more controversial issues. But yes, there's a lot of support and seemingly progress on the Ukraine bill. There's also a push to, there's a bill introduced yesterday with bipartisan support that would require U.S. officials to follow up and investigate any possible war crimes committed by Russia. And John Cornyn, the top Republican on that, said it's possible that will get folded into this funding bill. So that's an issue with a lot of bipartisan support.
All right, and we know those issues are pretty rare in Washington, D.C. Thank you so much to Jack Fitzpatrick of Bloomberg Government reporting for us this morning. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big gainer in the early hours trade is Albemarle. This is the biggest miner of lithium, which of course goes into electric vehicles. Really strong demand there has led to higher prices, and that in result is leading to a higher forecast for the company, and the shares reaping the reward of that this morning, up about 14% before the bell. Another stock that is moving on the back of earnings results is Sunrun. This is, of course, a solar energy company. Yes, it's facing higher input costs, but it's having success in passing those on to its customers because, yes, demand is pretty strong. That stock also is up about 8%. One final one to mention, moving to the downside, would be eBay. Of course, it benefited in a big way from the pandemic-era boom in online shopping, but that is decelerating and decelerating fast. Its forecast coming in much weaker than expected, and as a result, that stock is down about 7% before the bell, Anna.
Kaylee, coming up on this program, we will be talking to the former U.S. Defense Secretary, Leon Panetta. He joins us next from the JP Morgan Capital Markets Conference in Paris. More on that conversation shortly. We will also talk markets, of course, the Fed decision with Sebastian Galli, Nordea Asset Management Senior Macro Strategist. Plus, we'll be speaking with Air France KLM CEO Ben Smith about the return of travel this summer. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
recession season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
I think the whole world learned something that we always knew, that national security is always the most important thing, but it kind of recedes in the background. We're all doing well. But now it's the most important thing. It should be the most important thing for the rest of our lives. So maybe we all learned that is a permanent state of affairs. The Cold War is back. The allies have to coalesce, and not just for military purposes, but for global economic, strategic investment purposes, so that we've got a safe world.
That was JP Morgan Chairman and CEO Jamie Dimon speaking to Bloomberg's Francine Lacqua in London yesterday. Francine is now in Paris at the JP Morgan Capital Markets Conference. She joins us for an exclusive interview with Leon Panetta, former U.S. Defense Secretary. Francine.
Yeah, good morning, Kaylee. I'm delighted to be joined by Leon Panetta, not only former U.S. Defense Secretary, but also former CIA Director. So, sir, thank you so much. You have a huge, unique insight into how this war in Ukraine could end. What should be the strategy of the U.S. and allies now to get Putin either to the negotiating table or just to tell him to, like, stop? This has to stop.
You know, we're entering what I think is a very critical stage of the war. We've been through 3 stages. The first was Putin invading Ukraine and trying to take over the capital, and that failed. That phase 1 was a failed invasion. Phase 2 was siege warfare, a lot of destruction, a lot of killing of innocent men, women, and children. I think they were trying to break the will of the Ukrainian people. That failed as well. We're now in this 3rd phase. Russia has retreated from the capital, but they focused on Donbass. They're also engaged in a lot of artillery and missile strikes of different targets throughout Ukraine. I think right now we're in a stalemate between Ukraine and Russia. And the real issue is going to be, how long does that go on? It could go on for a period of time. The other option is that it can produce some kind of negotiated settlement, but a lot of that's up to Putin, and I don't see that happening. And the third is it could escalate. So we are in a very critical stage of this war.
Could escalation mean nuclear war? If Vladimir Putin feels boxed in and things are not going to plan, could he press the button?
I don't think there's any question that when you put a bully in a corner, you absolutely have no idea what is going to happen. And I think that's true for Putin. Putin is someone who understands force. He obviously is disappointed that his forces have not been able to achieve a quick victory here. I don't think he likes stalemate. And so the real issue is whether he resorts to either chemical or biological warfare or some kind of battlefield nuclear weapon, or invades a NATO country. All of that is possible. And that's why we are in a very tenuous and critical part of the Ukrainian war right now that could tell us whether or not this is going to be a war that will resolve itself, or it will escalate into a larger war.
What role can China play? And why have they not come out saying, condemning the war?
I think China is very nervous about what they see happening with Russia and Ukraine. They've seen the fact that Russia has been unable to be able to accomplish their mission, that Russia is now under some serious sanctions that are impacting on their economy. They've seen the unity of the United States and NATO coming together. They do not want to be a target of the same kind of sanctions. And so I think Xi right now is being very careful not to be viewed as taking sides. He'll provide some words, but I do not think he'll provide any direct assistance to Russia right now.
Mr. Panetta, it's Kaylee in New York. You said a moment ago that Vladimir Putin understands force, and I'm wondering if it was a strategic mistake for the United States from the get-go to say we will not use force, we will not put boots on the ground. For U.S. policy in the future, should we be telling our adversaries what we are not willing to do?
Well, Putin has been reading weakness on the part of the United States and our allies for a period of time here. I think that's why he went into the Crimea. That's why he went into Syria. That's why he went into Libya, why he went into Georgia, and it's why he conducted a cyber attack against the United States during our election system. He never paid a price. And as a result, I think he felt empowered. And I think that was true going into the Ukraine. So the answer to your question is that we need to make very clear to Putin where the lines are and be very clear to him that he will pay a price for aggression. He's paying it now. That's the right message to send to Putin. And for that matter, it's the right message to send to China, to North Korea, and to Iran.
He's paying a price, and yet it hasn't changed his behavior, Mr. Panetta. There is still war raging in Ukraine. What should the U.S. do next, aside from giving aid to the Ukrainians?
I think the most important thing is for the United States and our allies to remain strongly unified. We've never seen the kind of unity in the past that we're seeing now between the United States and NATO. They are really unified. The sanctions are working because they are unified. They're providing weapons to the Ukrainians that they desperately need in order to confront the Russians. And I'm really happy that we are providing important weapon systems that they need right now. And thirdly, we're reinforcing our position in NATO so that if Putin even decides to go into Poland or another NATO country, it's pretty clear that we'll go to war as a result of Article 5 of the NATO agreement. So we're taking the right steps. The most important thing is we cannot allow that unity to come apart. We can't allow any kind of crack in that unity because that's what Putin is looking for, and he'll take advantage of that. So we must remain strongly unified.
Is there a danger that we have two blocks in the world in 3-4 years? The pro-Russia and the anti-Russia, and that the world will be really split in half with China, India, Russia, and others on the other side?
I think what could happen and should happen is that what the United States has done with our NATO allies is exactly the right thing to do in confronting Russia. I think the United States and our allies in the Pacific ought to basically form the same kind of alliance in confronting China. We need to be able to make clear to China that if they become aggressive, they're going to pay a price as well. That's the best way you deal with China, is to show that we are serious about making them pay a price. And we ought to do that, frankly, in the Middle East in confronting Iran, and we ought to do that with regards to North Korea as well.
All right, Leon Panetta, former U.S. Defense Secretary, thank you so much for joining us, and thanks as well to Francine Lacqua in Paris at the J.P. Morgan Capital Markets Conference. Now, of course, Jerome Powell mentioned both Ukraine and China in his news conference yesterday, both risks, even as the Fed raised rates by 50 basis points. We'll discuss more about the Fed with Sebastian Galli, Nordea Asset Management Senior Macro Strategist, who will be joining us next. This is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. U.S. stock futures dropped back after a strong post-Fed rally. The Federal Reserve hiked rates to fight inflation, but stocks initially rallied after the Fed chair eased fears over bigger policy moves. The Bank of England is set to raise rates to the highest level since the financial crisis. It will also lay out how it plans to unwind more than a decade of bond purchases. The BOE may also unveil forecasts showing slower growth and rising inflation. And the Pentagon says Russian forces are bogged down, slowed by supply line and morale problems in the southern and eastern parts of Ukraine. U.S. officials also say that Russian missile strikes have been off target. I'm Anna Edwards in London with Kaylee Lyons and Chrissy Gupta in New York. Matt Miller is off today. And Chrissy, the US picture, we are seeing a pullback from those really strong rebound, post-Fed rebound levels that we saw in the US on Wall Street yesterday.
Yeah, Anna, and I mean, this was the biggest kind of rally you saw on a Fed hike day, going back all the way to 1978. So it's pretty normal to actually see this kind of pullback. But also keep in mind, before the Fed, Monday and Tuesday as well, we had a rally in the market, and that was non-traditional as well. Traditionally, it's a risk-off first 2 days, and then you kind of see a drop back on Fed day itself. So to see that in reverse, it kind of sets up the stage for futures to take a little bit of a pullback. However, if this turns around, Anna, you will actually see a fourth day of gains, which given the sell-off we've seen year to date would be pretty significant. Look cross-asset, though, there isn't a ton of selling conviction, which makes you think that perhaps futures could actually turn around. For example, the 10-year yield not doing a whole lot, 295 on the 10-year. You're also looking at crude, which is really just down marginally, down 1/10 of 1%. And even Bitcoin, which tends to see a 4% average move, one standard deviation move, at least, is only down about 1%. So once again, in a volatility adjusted context, not a ton of action when it comes to what the markets are doing this morning.
Well, and Creedy, of course, you're seeing a rolling over, not just in S&P 500 futures, but NASDAQ 100 futures as well, underperforming actually big tech is. You're starting to see a reversal of some of the moves of yesterday. Of course, Apple enjoyed a really big gain in that rally yesterday. It was up about 4%. It's now giving back about 0.8% of that in pre-market trading. Microsoft also down around that much. And some pain for the chip makers as well. AMD, Intel, each down about 1.5%. So a lot of unwinding of the moves we saw yesterday. And I think the Fed's message rang clear yesterday, ringing maybe differently in the early hour session this morning. It'll be interesting to see how this one shakes out.
Yeah, and it is that that story of yesterday that European markets are still reacting to. But add into that, Kaylee, the earnings story here in Europe, because it is both things driving Europe today. Yes, we've got the post-Fed rally in tech stocks and in basic materials that is helping lift the mood here in Europe. But we're up by more than 1%, and some of that is earnings related. More on that in a second. I put in the pound here, 125.66. We've seen weakness in the pound heading towards the Bank of England rate decision. This is a bit a dollar story, of course, but it's also to do with the pound and where expectations now sit for a rate hike and just how hawkish or otherwise we will hear the language from the Bank of England being. And there'll be a big focus on the split in the vote. What will the breakdown be of the 9 policy makers? Who will vote for what? And that's going to be a big focus. These are the earnings stories that I was mentioning. Shell moving higher, up by 2.8%. If you're looking back at the last quarter, a record profit for this particular oil major, this energy giant. And even the fact that we saw negativity surrounding their Russian business, that was not enough to cloud what was a very strong quarter for the company. And so that stock up by, as I say, 2.8%. And Airbus, this is a giant of the French market, up by 7%. They're still planning, or they are speeding up the building of the building of the A320s. And so as a result, that's seen as a really positive signal about the future of that business. We'll talk more aviation with Air France KLM coming up a little bit later on in the program. A quick word on Russia. We were just hearing really interesting views from Leon Panetta, former defense secretary in the US, where he was talking about how it's really important that America's allies stay together. Well, are there signs of gaps on the strategy that Europe adopted or announced yesterday with regards to Russia and oil? That is being cited by some watching the Moscow market, because we do see a bit of a move higher in Moscow stocks, and some of that's commodity related. Some people attributing that to some of the sort of rank-breaking comments that we've had from the Hungarians around oil, Kaylee.
All right, Anna, well, let's get back to our conversation around the Federal Reserve and the implications for these markets. Joining us now is Sebastian Galli, Senior Macro Strategist at Nordea Asset Management. Sebastian, the market clung to Jerome Powell yesterday, saying that they are not actively considering a 75 basis point hike. What I feel like the market didn't hear was him also saying that they won't hesitate to raise rates even further if it is necessary. Was that press conference yesterday as dovish as the market made it out to be?
I think it was quite a surprise because you're in a process where everybody's short duration and expecting yields to go higher, and trying to figure out both from the market point of view, from the economic point of view, and from the Fed point of view, how high can it go? Because the reality is none of them know it very well. The Fed probably has better models than pretty much everybody else. But even with its sophisticated model, quote unquote, they're not very sophisticated, it's actually very hard to figure it out. So what the Fed has done is essentially try to put a calming influence on the market to stabilize the rate curve. And by removing the 75 basis point, why do these people want? Maybe they believe in it, but they also believe that a recession will follow. And this is basically the trade that they're pushing, the view that they're pushing. And this is what the Fed is fighting again. Eventually, the Fed might have to hike more, but what it's doing is delaying the decision, because what it wants to do initially is try to calm the markets and say we are in control of the narrative and be in the front pages of Bloomberg as pointing out as such, and it's not really succeeding.
Right. I mean, would you think that the Fed would be happy with how the market interpreted the press conference yesterday, Sebastian? If the overwhelming impression, at least the short-term market pricing would suggest that the overall impression was a dovish one, would that be something that they were happy to let stand, or will we look for further Fed voices to come out and correct any misassumptions?
There are 3 elements. One is the relief rally that we've seen, short covering. There is blood on the market from the bears. That is a positive sign from the point of view of the Fed. The second element is that if you look at cryptocurrencies, they did not collapse. Gold did not collapse. Break-evens did not collapse. That does not indicate that households who are invested in the markets believe that inflation will come down very significantly and very rapidly. So this is a failure. The success is what we call swaption volatility. It's the volatility in the rates market, how uncertain are expectations regarding the Fed, and they have come down. So this is actually quite a success. So a mixed picture, and the problem that they have is if they go on the pages of New York Times, Bloomberg, and others, they're fighting against other stories which are more powerful, such as Ukraine and Roe versus Wade, and that is hitting their ability to influence your average CEO and households.
Sebastian Iscriti in New York. I want to stick with what you said about expectations because Chairman Powell made a very strong comment yesterday that perhaps was kind of left in the background. Monetary policy is working through expectations to a large extent in this environment where a lot of the commentary simply says the market is far ahead of the Fed or the Fed is behind the curve. Is that by design?
What he's trying to tell us is that the Fed is able to tell us what the future is, because you should believe the Fed and not what you read from me or from somebody else. And they might actually be quite right, because consensus is relatively close to what the Fed is telling you. And the Fed has an enormous amount of economists and people working on these problems, both on the narratives, on the models, and on the decision process to drive these expectations. But it's pretty clear that your average CEO hasn't gotten the message yet, but they will. There's a beige book process. There are all these discussions they have with the Fed, where the Fed will have to convince them that inflation is not going to rise ever more, that wages don't have to increase ever more. And so this process is one piece of a strategy which is continuing to drive basically that long-term story. And behind that is your ability to figure out where neutral rate, that you will tend to, where is it? Is that 2.5, 2,
Yeah.
or is it at 3%? And the answer is we don't really know, because what we
Well, he said it's more of a concept than an actual hard number figure, Sebastian. He also said that they could execute a soft or soft-ish landing. What exactly is a softish landing, and where do you put the odds around that?
The answer is, I'll give you the answer that you will not like, but the way that economists work is by assuming that there is a straight path. It might be somewhat uncertain, but there's a straight highway, and all you have to do is drive along it. It might go up and down a little bit, but it has a pretty decent trend in it. That's what we call the neutral rate. The reality, of course, is that you're driving down the mountain, it's night, you have your lights on, it's in the forest, there's some fog around, and you drive down to the plains and there are hills around, and eventually you reach home as the sun comes up. It's very complicated. These are a series of what we call temporary equilibria. Things can move very fast and find an equilibrium and then change it again. A lot of it depends on what the Fed tells us, or even sometimes some market commentators making outlandish claims. So we are in the process, which unfortunately is a complex one. So the answer is softish claim is driving your expectations. Do they know? They don't know any more than we do, but they probably know somewhat more because they're better trained, they're better at their models, and they're better at communication.
Very nice, very poetic, Sebastian. Thanks very much for joining us. Sebastian Galli of Nordea Asset Management with his thoughts on the markets. We will talk about the business of aviation and opening up for the summer post-pandemic. When do we get to those 2019 levels? We will talk to the Air France KLM CEO, Ben Smith, joins us shortly. This is Bloomberg.
lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We have this inventory and stock policy in place that gives us visibility, as I said, on the short and the midterm. In parallel, we are activating secondary sources that will be ready in case we have to rely on non-Russian titanium exclusively. That's not the situation of the industry at the moment, but that's something we are looking at for the future, and we want to be able to continue to operate would we find ourselves in that situation. We have taken the decision to develop the secondary sources to be able to, at a later stage, potentially be independent from Russian titanium.
That was the Airbus CEO Guillaume Fauré speaking with Bloomberg's Guy Johnson yesterday. Now, staying in the aviation industry, Air France KLM expects surging demand for travel to drive a return to profitability this summer. That's as the airline group looks to repay government support received during the COVID-19 pandemic. Joining us now, Ben Smith, Air France KLM's CEO. Ben, very nice to have you with us. Clearly, an aviation industry that is really excited, perhaps, by what lies ahead for the summer. What percentage of your 2019 capacity do you expect to operate this summer, Ben? Are we going to get back to 2019 levels or stick around 90%?
We're looking at between 85 and 90%, and over 100% on the transatlantic, our biggest and strongest market. So we're quite excited about the transatlantic.
And if there were to be one thing that might stand in the way of a successful summer, would that be higher oil prices, a shortage of cabin crew? What is the big risk to that strong summer?
Well, you mentioned those. I mean, the higher fuel prices are a concern, but even with the higher fuel prices that are already in place and the increased pricing that we put into the market, the demand is still very strong. So we're quite encouraged. The fact that restrictions are much lower than they were in the past, the ones associated with COVID, are really helping us. Because right now, if you're living in France, as an example, and you want to go to the U.S., there's no test required on the way back, so you don't have that worry that you'll get stuck in the U.S. And coming back to France, and that's really helped us.
So the flow of people around the world due to alleviations in restrictive COVID measures is easing. The flow of supplies of things like commodities isn't necessarily. You were talking about the impact that higher fuel prices has on your business. That also has an impact on consumers that are facing higher prices at the pump, at the grocery store, on their energy bills. At what point do you think there is a risk of the higher costs on staples, necessary items that consumers have to pay will weigh on discretionary spending, things like airline tickets?
Well, we think, at least right now, because it's been so difficult to fly over the last 2.5 years, depending on where you live, that traveling has moved up in terms of the rankings of non-discretionary or discretionary spend. So we're not seeing that yet. 9 months from now, a year from now, perhaps that may change. But for this summer, we are really seeing strong demand. It's quite encouraging. We're really pleased. Our U.S. competitors, domestic U.S., they've been enjoying this for quite some time. We don't have the equivalent here in France or in the Netherlands, so we have not been able to have an equivalent improvement in our performance. Now that international long haul has come back, in particular transatlantic, as I said, our biggest market, we're going to actually have more capacity on the transatlantic than we did before. There will be flat capacity in the industry. We are seeing higher yields, and I think what is a great phenomenon, We're only at 70% in terms of business traffic return, but we are seeing a new phenomenon, which is what we call high-end leisure. And this is making up a big portion of the lower traffic that we see in the premium cabins. It really is amazing. France is the #1 inbound market in the world. And as you know, it's strong leisure and there's a heavy luxury component to it. And we're quite well positioned to fully leverage that.
Ben, it's Creedy in New York. Let's talk for a moment about government aid. Will Air France-KLM need Dutch state support? And how does it plan on repaying, or when does it plan on repaying the French state aid?
Well, we've got a good plan to repay both the Dutch state and the French state from the destabilizing loans that were put in place. We've already started paying back both governments. We are working on a number of projects to improve our equity position. We're hoping to close on a few of those in the near term, and we'll be very happy to expand on that and to announce those when they're ready.
How difficult is it to find, Ben, staff at this point? Are you struggling to make sure that you've got all the staff that you need in the places you need them to facilitate what looks like an exciting summer?
So I think unlike the U.S., where there is a really strong pilot shortage, because in the United States, the airlines require pilots to have a minimum of 1,500 hours. There is not that same rule in Europe. So we do not have a pilot shortage at Air France-KLM. No pilot shortage, so we have no problem from a pilot perspective in operating our fleet. On the cabin crew side, there's no issue there. We are having some challenges on the airport staff, and particularly on the ramp. But passenger services in the airport, not an issue, and maintenance, not an issue. So we've got some challenges on the airport ramp side. I think we'll be able to handle them. We've got to ramp up. I don't think anyone was expecting this kind of return so quickly. And this is we don't need to put these people through massive amounts of training. It's just we need to find the people at those to fill those particular jobs. And because there is such pressure on U.S. airlines to have the necessary staff to operate their schedules, that's good news for us.
Just finally, Ben, a quick word on fuel prices. How well positioned are you for fuel prices if we do see substantial moves higher from here?
Well, I think relative to many of our competitors, we are better hedged. So European competitors are about the same, but we look at competitors in the U.S. and other markets. I think we're better protected. On the short and medium haul, we've got big differences. We have some airlines that are 100% hedged. We have others that are zero. So I think what we try to do is have a balance so that we are overall not put in a relatively worse position. So look, it's never great in our industry to have fuel prices that go up. But I think what's different this time, the lag should be shorter. Our customers are booking much closer in, so our ability to increase prices and ensure that they have the right impact on our bottom line is much better than it would have been, say, a few years ago.
Ben, thank you very much. Ben Smith, the Air France-KLM CEO, speaking to us as the company reports its numbers. Coming up on the programme, more on travel, in fact, later in the day. The Expedia CEO, Peter Kern, that's at 5:30 p.m. in New York, 10:30 p.m. in London. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lines in New York and Anna Edwards in London. Matt Miller is off today. Tom Keene, who led our historic Fed coverage yesterday, joins us now with his single best chart. Tom.
The single best chart, Kriti, is really simple, and this goes off of the move when we saw 75 beeps dismissed. And then the neutrality question came up right after, and the market took off like a rocket. But I really think we need to put it in perspective. This is Standard & Poor's 500 across the deviation model. This is a very sophisticated chart. I'm not going to go into the details too early in the morning. But all you need to know, Kriti, is we bounced off the bottom in a very big way and didn't get back to the center tendency of the new volatility and also to the long-term moving average, which is an exponential moving average. The answer is we just bounced off the bottom and sort of kind of like got back to the mean.
Sort of kind of like. All right, Fed Day behind us, Tom. Jobs Day is in front of us. Who are you going to talk about it with on your program today?
I'm glad you bring that up because the Jobs Day is extra important now after what we saw on the Fed meeting, 3.5% unemployment. And of course, jobs, labor, the fully employed America came up numerous times in our conversation yesterday. Thank you, David Blanchflower, for heated conversation from Dartmouth. Andrew Sheets will join us really to sum it all together. We're really looking forward to Mr. Sheets joining from Morgan Stanley. And also, Winnie Scissor will join us from Credit Insights, too, on the bond market reaction.
Looking forward to it. Tom Keene, co-anchor of Bloomberg Surveillance. Thank you so much. In addition to looking forward to that, here's what else we will be watching today. I will be watching the OPEC Plus virtual meeting. Will they change course? The answer is probably not. They're probably just going to go ahead with that 400,000 barrels or so a day hike, even amid the news of the EU potentially looking at an embargo of Russian crude happening over the rest of the year. And Kriti, obviously, OPEC Plus really hasn't been having heated discussions about this really in the last couple of months. The meeting has been very short, even despite political pressure. I wonder if it'll be longer than, say, 13 minutes today?
Well, we'll have to see. And one of the really reasons for that is simply the hangover that you're seeing from the pandemic legacy. And speaking of hangovers, what I'll be watching is the hangover from the Fed yesterday, specifically what the market reaction is, just given we've already seen that monstrous rally yesterday on the back of the Fed decision, as well as those two prior days as well. How much optimism is really baked into the market, Anna?
And there's a lot going on here in the UK. As you point out, local elections take place. That means 7,000 council seats or local government seats are up for grabs across London, Scotland, Wales. Reporting restrictions mean we can't say much about that, but we can tell you that the Bank of England is also meeting to set interest rates. Will we see the fourth back-to-back hike coming through from the Bank of England, from Threadneedle Street? That is going to be a key focus. And watch the vote split. Could we see a three-way split with some voting for 25 basis points increase, some for 50, and some voting to stay unchanged? That's going to be something that could move the pound weaker as we approach that meeting. That is it for the early edition. Surveillance is ahead. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
I do think markets have sort of priced in a lot here.
Yes, equity markets have had a hard run of it in the month of March and now April.
Unless we get a deep recession, there's a limit to how much equities will fall from here.
The Fed looks at the equity markets very, very closely. They don't want to destabilize them.
We could target a stable 4% inflation rate if we wanted to, or a stable 2%.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures correcting lower by 0.6% TK after a massive move in yesterday's session.
Massive move off of it. It came off the 75 beep chit chat. I guess Mr. Pollard put in the timeout chair. But then, John, I'd also suggest a real comfort about how the Fed will address neutrality as we head up towards the great mystery, which is neutrality. There was no mystery to the market, John. Really, what a lift, what a move in the long end of the curve.
Equities up, yields down, particularly at the front end as well, Tom. I was surprised, I have to admit, I was surprised by just how much Chairman Powell clarified the rate path through the summer.
Yes. Well, the rate path is a way to talk about it. We got Andrew Sheets, among others, joining across surveillance this morning. But I would also note hydrocarbons as well. John, can we note as we go to Bank of England today, oil, 111 a barrel. That's been unspoken.
WTI just short of 108 at 107.91 as well, Tom. I'll keep an eye on that too. Lisa, as Tom pointed out, the Fed behind of us, the Bank of England right in front of us.
And they have a harder path, right? I mean, this is going to be a much more difficult meeting in an hour and then an hour and a half when we get the press conference, because they're going to be hiking into slowing growth. We had Jay Powell yesterday come out and talk about the strength in the economy, how he is still confident that perhaps they can get a softish landing. It is softish though now, and not even soft, but the Bank of England has a harder thing to do.
Is that the word we're using now?
Softish.
Softish.
Yeah. Soft landing was it before. Now it's softish. Maybe.
Do we know what that is?
Yep, then it's going to be really challenging to get there. It means that he's losing conviction, that he's going to be able to orchestrate this. As a lot of people say, it's going to be tough.
We've got to catch up with some important voices through the next few hours. Let's go straight to the price action this morning. Good morning to you. What a move yesterday on the S&P 500, the biggest one-day move higher, going all the way back to 2020. This morning, down by 0.6%. The Nasdaq 100 down 0.8%. Yields higher by a couple of basis points after moving lower through yesterday, 295.22 on a 10-year. And the euro back at 106, Bramo. 106, euro dollar negative 0.2%.
Honestly, this has been a moving target. I really want to understand what the reaction function is when the ECB comes out with their rate decision, arguably even tougher than the Bank of England, as they try to grapple with also the FX moves and how that influences their economy. All right, 7 a.m., that is the Bank of England rate decision. 7:30 a.m., we get that news conference. Following it,
CPI in the United Kingdom climbed to the highest level since 1992, 7% in the latest read. Again, high inflation, but you get a sense of the slowing growth, and this is reflected in real rates that are still severely negative. You've got the actual two-year yield in the United Kingdom still only at about 1.6%, so not exactly climbing to the levels that you would expect. So how do you truly justify this? At 8:30 a.m. in the United States, U.S. April initial jobless claims, we talk about a tight labor market. Jay Powell talked a lot about that. What about the participation rate? When do we start talking about the fact that a lot of people, at least by this measure, are still not back in the workforce compared to pre-pandemic? This is sort of underpinning the mystery in this market at a time of record high job openings. And today, OPEC Plus convenes virtually for its regular meeting to talk about output. They are expected to marginally increase output. But I gotta say, John, they are not actually achieving those increases in output. It has been more difficult because of how tight supplies are, and frankly, because of some of the disruptions and hangups in terms of how quickly they can bring things back on. This, to me, is one of the biggest questions underpinning the recent rally in crude, given the fact that we don't know how much supply could even be available at a moment's notice, should it be allowed.
How fast do you think this meeting will be? Do you think they'll go to 15 minutes? 20?
I don't know. It's going to be bold.
It's just depressing trying to take them seriously at the moment, given how short those meetings have been. Lisa, thank you. TK, looking ahead to the Bank of England, this is what Kit Jukes had to say.
Yeah,
little scope for a hawkish shock. He went on to say what it does have scope for is economic disappointment. He said that cable, that's the pound sterling against the US dollar, is more in danger of breaking 120 than euro dollar is of breaking parity.
Well, part of this is an island nation with limited optionality. John, his degrees of freedom into this meeting this morning are very different than Lagarde or Powell. He's just got fewer choices to make, and no one ever likes to do that.
Sterling trading right now at $1.2575. Looking forward to bringing in that decision a little bit later. We still need to talk about Chairman Powell. Just a couple of words, burying a 75 basis point rate hike possibility later this year. Take a listen.
75 basis point increase is not something the committee is actively considering. Assuming that economic and financial conditions evolve in ways that are consistent with our expectations.
And that is all it took to spark a massive rally in this market. TK, I think that tells you more about how this market was priced going into this meeting than perhaps anything else.
I featured that chart 20 minutes ago with the 5 a.m. hour, John. I'm going to be direct about it. What we saw yesterday, folks, was an absolute textbook, deeply discounted market, just reacting up to the middle. We almost got back, John, on Standard & Poor's 500. We almost got back to the center tendency of the recent volatility of SPX. And so, you know, now what from here? I think you're going to see a lot of people publishing into the weekend, particularly after that jobs report.
Let's get to the now what with Hugo Rogers, the CIO at Dowtech Bank and Trust. Hugo, great to catch up with you, buddy. Let's start here. What changed for you yesterday afternoon?
Well, I mean, we moved from the market thinking that the Fed was being prudent and practical to the Fed being in a panic mode, and Chairman Powell just wound that back. He said, no, we're not panicking. We're going to make steady rate increases. They're going to be fast. They're going to be front-end loaded, but 75 basis points. That reeks of panic. So he wound back from that. That was one big thing. But we speak about the framework of the tightening. There was no sort of rollback of consistent and front-end loaded rate increases. So it was a move. We're not panicking, but we are still tightening at an aggressive pace, really.
Hugo, if we get a new rate regime, wherever that rate regime is, do you have a confidence across corporations, and particularly American corporations, that they can adapt to a new rate level, dare I say, even a positive real yield?
I would say no, really. Mind your eye with that, because it's not just the architecture of rates; it's all the second-tier effects there. It's the Fed, when it was at a zero bound, was actually manipulating, maybe too strong, but controlling large parts of the market through things like suppressing volatility. It was volatility is analogous to rates when you're at the zero bound. They were suppressing volatility and buying through the curve. So the volatility of rates moved. That's up. That's permanently elevated. The era that we've been in, that's gone. VIX elevated. You know, we saw a VIX up at 35. When it comes, it doesn't go back down below 20. So spreads. There's a whole raft of effects. We haven't even spoke about the effect you were touching on just there. Currency volatility and weakness in other currencies. It is against the dollar. So there is an entire framework of second-tier effects that, no, the corporate world is not ready to start digesting, I don't think.
So what are the consequences of that?
Well, yes, the trend is, I'm afraid, not your friend in risk assets. You have money is obviously not free, but effectively the spreads against that base rate are widening too. So the cost of money is moving from not free to fairly priced. We think it'll get expensive. So companies that are reliant on zero cost of capital into perpetuity are toast in our mind.
Well, but the reason why I ask is because yesterday it felt like people were just trading the tail risk, right? They basically were trading on the idea of the possibility of a 75 basis point rate hike more than anything else that Jay Powell had to say. What does that tell you about positioning and about what you want to do in the next couple of months?
Well, it's an excellent question because you always have to frame the timing is. The here and now is so compelling that people don't realize that in the ARK Innovations ETF, it's down 70% from its high. It's been in a bear market for a year. So it's not what I'm talking about with these strained business models and where zero cost of capital is discounted into perpetuity to justify the valuations. That is a road that has been traveled for a year. So it's not a surprise to see these snapback rallies. There were very oversold conditions. So yes, in a febrile atmosphere, you're getting these snapbacks, and they're to be expected. But the fundamentals is that liquidity is continuing to drain. You saw the quantitative tightening program starting in June. That's continuing to drain. So hopes for these kind of companies staging a revival, we think they're misplaced.
Hugo, awesome to get your thoughts the day after. Hugo Rogers there of Dowtech Bank and Trust. Thank you, sir. This is the story for a lot of people in this equity market right now. Can they say with comfort, with confidence, that we have seen a peak in the front end of this yield curve in the Treasury market? TK, do you think it's too early to make that call?
I think it's a little bit too early. We've got to wait till Friday on that. That's like picking Man City over Real Madrid. John, we don't have a clue what's going on here, and I think Powell really walked the ballet yesterday of, it's such a cliche, but it's true. Original territory. That's where they are. They're making it up as they go. And this is something, John, this press conference yesterday, he could not have done in his first, say, 2 quarters.
I have to say, Tom, I think this has set up a massive Jackson Hole in August.
You mentioned that yesterday.
250 basis point moves, John, several CPI prints, then we get to the end of August.
The problem, John, there is they put us, Red O'Keefer of the Amex puts us in these cabins in the middle of nowhere, and we'll be up at 3 a.m. walking down a dark road with bears out there in the road.
You're already trying to arrange the journey.
I was about to say,
right?
Who has a little violin?
I just see the 3 of us out at Jackson Hole.
I'm sure you do. I think this was part of the plan, Lisa.
Oh, it's a Tetons.
Tom keeps saying they're going to be data dependent, and then it's all about Jackson Hole.
We've got to get out there. We've got to watch that data that we're dependent upon. Honestly, I think that it does set up a big Jackson Hole, because also this idea of getting to a 2 or 3% neutral rate, does that stick? Do they feel like they're getting some success with that at that point? And that will be a point where they can actually tell.
TK, how about that game? Real Madrid. City. Did you catch the end?
No, I look at La Liga as a much more technical league, and much, they were physical. Man City was very physical, and they just got worn out. And the technicians,
keep going.
The technicians of Real Madrid came back with a vengeance. Gareth Bale on the bench, yes.
Is that it? Is that the match analysis? Thank you, Tom.
Thank you. Value
Futures
add.
down 0.5%.
Value add.
Oh, a few more hours of value add right here on Bloomberg TV and radio.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Fed Reserve Chair Jerome Powell is vowing to do whatever it takes to curb inflation, but he acknowledged it could cause some pain. The Fed raised interest rates by a 0.5 percentage point for the first time in 22 years. Powell said similar moves were on the table for June and July. A Senate committee is expected to approve legislation allowing the U.S. to sue OPEC for manipulating energy markets. That would clear the way for consideration by the full Senate. The so-called NOPEC bill, which has been introduced many times before over the past 2 decades, but has never gone anywhere. Now it will be considered with oil prices at historic highs.
And Ukraine is accusing Russia of using what it called missile terrorism across the country. Russian forces bombarded railroad stations and other supply line targets throughout Ukraine. Russia's defense minister says that the West is, quote, stuffing Ukraine with weapons. China may soon reveal more policies intended to rescue the economy. According to government media outlets, actions to promote investment, shore up exports, and support technology platform companies are all on the table. Chinese leaders are promising to meet growth targets without compromising on that tough COVID-0 policy. And BMW posted first quarter profit that beat estimates. The German automaker and its rivals have been hampered by that semiconductor shortage and other supply chain issues, so they have shifted production to higher margin models. BMW delivered 6% fewer cars, but revenue rose 17% over the previous year. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
What the United States has done with our NATO allies is exactly the right thing to do in confronting Russia. I think the United States and our allies in the Pacific ought to basically form the same kind of alliance in confronting China. We need to be able to make clear to China that if they become aggressive, they're going to pay a price as well.
That was Leon Panetta there, the former U.S. Secretary of Defense, sitting down with Bloomberg's Francine Lacqua earlier this morning from New York City this morning. Good morning to you all. Equity futures negative 0.5% after a major move higher in yesterday's session on both the S&P 500 and on the Nasdaq too. The Nasdaq down about 0.7%. The Nasdaq yesterday up more than 3%. Yields up about a basis point or so to 295.03. And I have to say, no major changes on the south side following yesterday's meeting. Maybe a little minor one from Goldman. Jan Hatzius and the team introducing another 50 basis point hike to the July meeting. That is widely consensus now. They go 50 again, 50 after that, but ultimately they haven't changed their terminal rate forecast, Tom. They've still got that at 3 to 3.25.
Well, do we do that in July? I'm sorry, I don't know. McKee will know this. Do we adjust the dots next time around?
June, Tom.
Yeah,
next
June.
meeting. Yeah.
So that's a big deal. They're gonna show their cards, if you will. John, I would suggest it's nonlinear even to July. I don't buy this idea. It's a lot of free time. Boom, it's done. Then it's difficult. It's going to be very smooth and very nonlinear. A new pressure along the way. And the next meeting is going to be a different pressure, John, than what we saw yesterday.
What they've done now, though, is clarify the rate path, I think, through the summer.
Yes.
June, July, get to August, and then look at the data over the last 2-3 months and try and establish what's happening with inflation. That's when you get together at Jackson Hole, you go into the September meeting, and maybe things change, Tom. I don't know. Well, I'm still not entirely convinced that this Fed has moved away from transitory. I know that won't be a popular view, but I'm still not entirely convinced that they have. I think there is some on that committee that still believe you get to the end of summer, inflation started to come through, a little bit lower, you start to see that movement month on month on month on month, and they can back away. We'll see.
Let's close the loop on that, and Jack Fitzpatrick's going like, why are we talking about this? John, this is really important. They haven't given up on transitory, but is it a new transitory back to 3 to 4% inflation, or the hope and prayer of getting under 3%?
Well, I think the reason I think that, Tom, it's implicit in what they talk about when they say we may have to go above neutral. You either believe you have to go above neutral and take a more restrictive stance, or you don't. And if they haven't made a conclusion on that just yet, Tom, there must be some degree of confidence that inflation comes in without them ever getting restrictive. That's something we can talk about later.
Let's get back to the focus now of inflation, and one of them among pros, and Javier Blas leading on this, is this price of diesel I mentioned earlier. Diesel, since the beginning of the pandemic, retail up 88%. Since the beginning of the war in Ukraine, up 36%. Jack Fitzpatrick knows this, as do the people of West Virginia. Jack, we've got more primaries coming up. What will you look for?
In the primaries, I'll be honest, the Ohio ones were some of the most interesting ones that we've been looking for.
What about forward here? May 10, West Virginia, right?
Yes, I'll be honest, I'm not quite on the West Virginia primary beat, so I am going to have to lean on
fine,
my
but the answer is we're
to
now
go on
into
that.
the season. The answer is we're into the season, and we're into the season with new retail diesel, retail gas, retail eggs in aisle 4 inflation, aren't we?
Yes, and that is creating pressure all across, especially the Democratic caucus. You're hearing we're in the early stages, nothing with a clear path to the floor, but pressure to come up with potentially some idea on rebates for some people. There's a real challenge, though, because the Republican response to anything that Democrats are proposing just to hold bowled people over on gas prices is pointing to the Biden administration policies that they don't like, whether it's pipeline development or anything else on fossil fuels. So they're very much locked into a very partisan debate over the actual specifics of gas prices in Washington.
Jack, there are two sides to the inflation discussion. There's the actual cost of buying goods, and then there's the idea that people are getting paid more. In about 2 hours, we're going to get an unemployment report that probably shows the latest jobless claims, and then tomorrow we're going to get the jobless report. It's probably going to show an unemployment rate of 3.5%, which is going to be the lowest going back to the 1960s. Is this being a counterweight, serving as a counterweight in polls, or is this just basically an ignored feature in a market that's a lot more complicated?
It might be an ignored feature. It's something that the White House has tried to play up. Although, when we've heard them say that the president is going to try to get out on the campaign trail, it doesn't appear that it fixes all the problems. We've heard the president be pretty vocal about understanding that inflation is an issue. He's talked more and more about trying to reduce the deficit, which is something that some moderates like Senator Manchin have pushed him on. A lot of the rhetoric from the president is conceding that inflation itself is a major issue and not quite trying to persuade the public that that's just the flip side of the coin to the quick recovery in terms of job creation.
Hey, Jack, wonderful to catch up with you, sir. Jack Fitzpatrick over in Washington. Just a couple of headlines breaking on Elon Musk and Twitter. The headlines read as follows. An amended 13D, and this is it. They've received some equity commitment letters on May 4th, this according to Elon Musk. Got equity commitment letters providing for $7.139 billion. Lisa, the next headline, Elon Musk gets these new commitment letters and is seeking additional financing commitments for the deal. Have we established whether that financing is there yet or not?
No, we haven't. It was 54.20 is the share price, right? This is a big deal. This only gets a very small part of the way there. Does he have the shares that he actually has been liquidating? Is that enough to really cushion some of the equity financing? And does he really need other people to come in? I've been actually really surprised, though, by the institutional interest. And at least on paper, it seems like there are a lot of willing investors. The fact that there aren't more here kind of is a surprise to me.
We all knew this was going to happen, but I think we've codified now that Mr. Musk, John, wants to go private, and then he wants to go public 3 years out.
And look, if you're an investor, Tom, and you see Elon Musk, who basically adds value to everything he touches, you can see why that might be an attractive proposition.
You think so? With a date on it, you can put a bow on it 36 months out.
Given what he's done with Tesla. The stock is trading at $49.50 in the pre-market right now, and the offer price is $54.20. So there's a spread there, Lisa. There's about $5 a doubt there.
Honestly, a lot of questions, not only just about his ability to get the financing, right? You say, is the financing there? I think that $5+ of doubt, the difference, the delta in the share price and the offer price tells you a lot. But there's also a question on a regulatory stance, given how vocal he's been and given that this really is called the town hall square of the modern era.
He's in talks with Jack Dorsey, of course, the founder of Twitter, to contribute shares to the deal. This one's a work in progress. Let's put it that way. We'll continue this conversation in just a moment. Equity futures down 0.5% on the S&P. Yields higher by about a basis point on a 10-year, 294.83. Heard on radio, seen on TV. This is Bloomberg.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
What a move yesterday. We talked about it a little bit yesterday afternoon. If we'd all got together and said, yes, he will hike, raise 50 basis points in May and signal another 2 50 basis point rate hikes, and then we said, but it'll be dovish, everyone would say, Tom, what have you been drinking? And that's what happened. Futures are down 0.5% on the S&P, on the Nasdaq down 0.7%. Yesterday, just a massive move as Chairman Powell takes a 75 basis point hike off the table, but he did more than that. He clarified the rate path through the summer and then talked about the need, or maybe not the need, to get to a more restrictive stance. So can we say with confidence we've peaked on a 2-year yield? Maybe you can, at least in the short term. This is what the 2-year looks like right now, 268. Yesterday, the higher the session, 285. The lower the session, just south of 260. That's a big range, and yield started to come in at the front end a whole lot more. Today, up just about 4 basis points. But are we confident now we don't get that breakout towards 3% at the front end of the yield curve? Given what we were told yesterday, perhaps. But now we get back to the data. The inflation print next week, after that, and into the summer. Things could get a whole lot more interesting. Not just for the Fed, but also for the ECB, with one policymaker this morning saying that economy is effectively stagnating. What does that mean for when the ECB meets next month, as they all acknowledge they need to wind down QE and get away from negative interest rates? Euro dollar right now, 106. Kit Jukes of SocGen earlier this morning, he put out a piece and he said we've got more chance of breaking 120 on cable than we have of euro dollar getting to parity. That call coming at the same time Citi turns neutral on the US dollar with euro dollar at 106. Sterling right now at 125.59. And the reason for the Kit Jukes call over at SocGen, Tom, the fact of the matter is we get back to the data in the UK, and that's what we've been looking at for a while. He's expecting economic weakness regardless of what this BOE does, and they are hiking into weakness in many people's eyes.
Yeah, and some of it was I thought he was more weak sterling, John, than weak euro, even talking about a breach of a 120, not predicting a 120, but the tendency there was a struggling United Kingdom.
Where's the scope for a bigger move?
Yeah.
A gap lower, weakness. More scope, apparently, for Kit Jukes to see economic weakness come through in the UK, and therefore for cable to challenge 120. That's more likely for him than it is for euro dollar to challenge parity.
It is a mix of picking up the pieces from yesterday, but also moving forward. Of course, we do that to Bank of England, which John will give us wonderful wisdom on. Rabila Faruqi joins now, chief U.S. economist at High Frequency Economics, on what Jerome Powell wants to look for in tomorrow's jobs report. Suddenly, it is upon us, Rabila, a jobs report. What will matter to the chairman of the Federal Reserve System?
Good morning. Yeah, and you know, I think what the message from the Fed has been that the U.S. economy still has a lot of momentum, in particular the job report, the employment situation. And we expect to see another solid gain tomorrow, you know, maybe a tick down in the unemployment rate to where it was before the pandemic, a 50-year low. But I think what we see on participation and wages, that's going to be the focus for the Fed. That is certainly focus for us. And, we expect to see an improvement. We've seen an improvement over the last few months, but we're still, roughly 1 percentage point below where we were before the pandemic. So I think that is a very important thing that we're going to be parsing through in tomorrow's numbers.
The acclaim of HFE and Carl Weinberg and you is linking in rates into the greater economy. Let's do that now. Jobs report, wage information, how will that move the 10-year yield?
Yeah, it's difficult to assess right now because there are so many things going on. We do think that, the way the 10-year is responding to what the Fed is doing is, it's an interesting dynamic. And I also think that what's happening with balance sheet reduction, I think they're going to move very quickly in a matter of 3 months. So I do think that, if we see some momentum in the labor market, which we expect to see, and we see some positive momentum in the U.S. economy, which is also something we expect to see, and we see this balance sheet reduction, all the interest rate hikes going through, then in our view that maybe there is upward pressure on long-term rates. And but again, what happens on the global stage, what happens with the war, how much of a safe haven trade we see, all those things are going to play into how rates respond.
Rubila, how much do you think the Fed still has conviction about transitory, about the idea, as John was talking about, that inflation will come down on its own even if they don't tighten materially?
So it was interesting that he actually alluded to the fact that core PCE is flattening. Now they've been so heavily criticized on this transitory stance and on their stance on inflation in general that, I would think that they would hesitate to make any, definitive comments about it. But what do we expect to see in the CPI? We expect to see a deceleration next week, when we get the numbers. So there is some, deceleration that we expect just because of base effects and, things normalizing, especially the rotation from goods to services. But we can't, it's very hard to say that inflation is just going to recede, especially headline inflation, especially what happens with energy and food prices. And, what do we see if we actually see an energy embargo? Those things are going to be very important going forward. So it's really very difficult to say that whether the Fed tightens or not. I do think that they need to move on inflation. They need to move on rates. They also need to prepare for the next downturn, because really, if something goes horribly wrong on the U.S. economy and it does tip into recession, there's nothing on the policy front, monetary or fiscal.
Wait, hold on a second, Rubila. Are you basically saying that they need to raise rates so that they can lower them in the next recession?
No, I mean, I think they need to raise rates because the U.S. economy, the fundamentals of the U.S. economy do allow that. But also, I mean, look at where the U.S. economy is, look at where the labor market is, look at where inflation is, and they are at 75 basis points, 75 to 1%. So I do think that fundamentally they need to move, but also, I mean,